Yo, are we live? Meeting is now streaming live. That's fantastic. 365, shake my hand. Let's quickly just set this whole thing up all the way. Set this thing up all the way. If you can hear me, shake my hand. Just let me know, guys. I need one person to help me do a sound check. So if you can hear me, help me do a sound check. Let me know my audio is good. And then we can start. Got a lot of stuff to talk about. Here in my desk, meanwhile, man, I've been like camping here the whole weekend. It's a mess. Right, just need one person to let me know they can hear me. Just one person, let me know if you can hear me, then I can start. Shake my hand, shake my hand. My audible, going once. I'll just start. There's just so much things to talk about and so little time, guys. So if you are watching live, please let me know if you can hear me. All right, so I think I've got some feedback. Just one. Yeah, I've got audio feedback. Right, guys, let's start. Welcome to War Room number 36 of 2021. If you're new, basically, Traders War Room is simple. I walk you through the market. I show you what I can see. I'm an institutional trader. I trade using supply and demand. I've been doing this for a very long time. Head trader of 365 Trading Academy, head educator as well, at least for this year. Next year, we'll see what happens if I'm going to hire someone else to take over the education front. And I love this. I love doing this with you as usual. So thank you for joining me, those of you who have joined. We have quite a bit to talk about. So I want to start off with something very different. It's got nothing to do with Forex pairs and everything to do with the market. Okay, it's actually going to affect the market this week. And because of time, generally speaking, it would be better if I did a separate video around this, but I'm going to spend about 10 minutes on it because it's absolutely important, number one. Number two, because of time, there really isn't another window for me to break this stuff down. Highly hope to catch some trades. Hi, David. Fantastic, brother. Fantastic. Right. So it's absolutely crucial you understand what's going on. This is probably one of the biggest events right now in the market that is poorly covered, number one. Number two, not well understood. So I'm hoping to spend a little bit of time breaking that stuff down, and then we're going to move on to a couple of weekly analysis, right? So you guys will remember, if I've ever taught you before, if you've done the course in the live classes, or if you have access to our remote course, you know that generally speaking, when we start our analysis, we look at every single pair there is out there, just so we can back test that our strategy works all the time. That's how the course is designed. But more importantly, as I walk you through a lot of the market pairs, you generally start to notice consistency. So you start to see that in 2008, there's certain assets, certain clusters of assets that moved in a very particular way, right? That's just generally how it works. Well, this is interesting because we are sitting literally at the makings of a potential 2008, right? And a lot of FX pairs are going to be watching that. So I'm going to put here on the whiteboard real quick specific things that you need to know about. Now, this has been going on for a little bit, not for too long a time, and I'm pretty sure it's going to get the type of coverage it deserves. But there's a big company, it's actually, if I'm not mistaken, the second largest real estate company in China. Why is this important? I'll get to it right now, right? So it's the second, and it's called the Evergrande. And Evergrande, however you want to pronounce it. But and these guys are literally the second largest, biggest real estate company in China. And they actually have a portfolio big enough for global investors. So global investors invest in Evergrande, right? But Evergrande right now is in a terrible crisis. It's in a phenomenal crisis. It's literally the same crisis that's kind of like influencing the sell-offs we're starting to see in crypto, the same crisis that's influencing the sell-off we are starting to see in the stock market, the same crisis that will most likely influence a lot of sell-off this coming week. So if you're looking to trade Nasdaq, Dow 30, SP 500, what's popular amongst retail traders? Some retail traders do trade the DAX or the German 30, etc. All those indices are a little bit worried, just a little bit, because the Evergrande crisis literally is the making, or looks like the exact same thing that triggered the 2008 crisis. Now, in 2008, we had a financial crisis. A lot of people know about the financial crisis in 2008, but most people don't really understand it. A big crisis like 2008 is not always caused by a multiple plethora of things. In fact, the 2008 crisis was predominantly caused by the Lehman Brothers, right? So one particular big company, right? One particular financial institution that completely defaulted and then required a massive bailout. And there was a ripple effect. That ripple effect then created a flash crisis called the 2008 crisis, which we like to refer to in the academy as the banking crisis, right? When somebody big stuffs up in the market, we all pay attention to this, right? I know it's not really traditional that my war room start like this, but I won't have time to do a separate video for this, right? So this is going to affect the markets this week and potentially next week, right? It's all based on what the Chinese government says tomorrow, all right? Essentially, the Chinese government is okay, and okay for a communist party is never great for the market, but it's better than nothing. But if the Chinese government refuses to bail out Evergrande, because this company needs a big bailout, then the markets are in big trouble. If markets are in big trouble, you're going to start to feel it in your risky assets. If your risky assets are in trouble, we're selling them and buying safe havens. So we see gold, dollar, etc. go up. And then we'll look for those levels right now in the charts tonight together. But I want to explain this crisis first. So the Evergrande crisis is literally being compared to, and I completely would say that it's almost got the makings of 2008. It's not yet there, but it's definitely there. So Evergrande, big company, like I said, the second biggest real estate company in China. Now, the problem with this company, number one, is all the real estate. So I don't know if you guys invest in real estate, which you should, but the real estate here is underdeveloped. So you've got a big company building, I think their target, if I remember correctly, guys, I've been up since 4 a.m. on Sunday up until now, just going crazy, researching the stuff. Yesterday, my partner took out for lunch, but outside of the lunch break that we had for about 2 hours, whatever, I've been reading this because on Thursday this week, am I right about Thursday? Friday is the 1st. So on Thursday this week, I have my investors meeting. So I literally have to line up a big report. So I'm trying to finish this report for them, right? And explain where and why and how long we'll be holding cash and why we need to pull out on specific stocks and where we need to quickly buy and where all the dips are. So normally after my investors meeting on Thursday, those of you in the wealthy to 3 years program, right, which is my report's going to be 40 pages for company investors that we deal with. And then for individuals, I'm going to give you a quick summary of where I am going to be moving money. So if you're in the Wealthy in 3 Years program, please expect that email. That email is now basically ready, right? But I owe it to investors first to actually present it, and then I send it out. So Friday, the 1st of October, check your inbox. I've got a big surprise for you. And this is perfect timing, right? So now let's quickly break this down. I'm going to spend 10 minutes on this crisis and then link it to the Forex market and what opportunities exist, right? So, hey, shake my hand, Alvin. I see you guys. Good to see you there in the live chat room. Right. So it's a real estate company. And the goal was to build 1.4 million homes, right? 1.4 million new homes. When you're a big company about to build 1.4 million new homes, you create a proposal, you create a hype around it. You are in search for investors. Did they get investors? Yes, they did. They got tons of investors. The Bank of England is invested in this project. Obviously, Chinese investors, obviously individual multi-millionaires and billionaire investors, banks. A lot of banks are inside this deal. They got a lot of investors to put money because real estate is gold, right? I build house, we get people to rent forever. It's literally the main reason why banks were established. Banks are not there for you to keep your $100 in the account. Banks are there for loans for home. They had to create a product to keep control of money. Money isn't the product that the bank does. The product is what you need the money for. Cars, banks. Homes, banks. Assets, banks. Business loans, banks. Long story short, they got a lot of investors into this company called Evergrande, right? So that's very important because that's where the problem is. Well, the company, in their latest shareholder report, had no choice because of legal pressure to disclose that they are 300. Now listen carefully to this: $300 billion in debt. They owe $300 billion in debt. Now, when a company owes debt, a lot of debt, before I know whether to buy stocks into that company, it's fundamental analysis 101. I always have to check their assets, right? Sometimes you don't have to panic too quickly, right? Your stock can take a hit for maybe 2-3 months to a year. As long as the fundamental analysis is still good, it's a stock. You're supposed to be there for 5-10 years anyways, right? If it makes sense that you're going to get a dip and price is going to go up, I stay. But for me to stay, I look at the assets. Now, this is how much they have in assets. They have $200 million in assets. They have $300 billion in debt. Their assets barely cover 10% of how much they owe. This company is in trouble. All right, so the stock price kept falling. I'll literally show you the chart right now. For some of you, it might be the first time you actually see our supply and demand strategy work the exact same way it does in the Forex market, like it does in the stock market, right? So markets created a supply, price hit supply, flash crash, whoop, right on that particular stock. You remember in last week's war room when we're looking at trades, right? We spoke a little bit about China 50. And I spoke about China 50 I think 2 war rooms ago. So we've been talking about China 50, systematically for the last 3 weeks. And I keep telling you guys, there's not a perfect buy here. The first China 50 is the top 50 companies in China. It's an aggregated index stock. It's like Nasdaq 100. They've got China 50, right? And we know that the Chinese government, CCP, right, the Communist Party in China, has been destroying Alibaba, the video game company, online learning companies, etc., that make up a lot of this, right? Really thrashing the stock. It was the first time ever in a China 50 chart, this is so important, that a monthly demand was removed. It's the first time ever monthly demand was removed, right? So the sentiment is terrible. The thing is completely risk averse right now. It's removed the demand, so it's going to sink a little bit lower. Before Evergrande crisis went popular, the fundamentals for China 50 stocks were completely different, but in themselves were very valid. And I did tell you guys last week that they're probably gonna sell any rally. So any short-term buys you make, to prepare for them to get sold, and that's pretty much what happened this week. There was a bit of buying Monday, Tuesday in China 50, and then we finally got a good entry to sell, right? Just like as discussed in the previous war room. Now, with all of this going on inside China 50, remember China, by the way, has created the most billionaires in the world, number one. Remember, number two, that I proved to you guys with simple research that most investors in China 50 are also part of the Chinese government parliament, right? In fact, Chinese government parliament has got about 2,000 and something millionaires or billionaires or whatever. We did that together in the previous forum. Just watch that video again, right? So the same people pushing the stock down are inside the Chinese government. The same people pushing new regulations to crush the stock are in control of the law. Pause. The same people in the Chinese government cracking down on crypto. If you're in our public Telegram group, I think I brought it up on Thursday, Friday, I told you that the Chinese government right now owns the most Bitcoin. In terms of institutions, right, across the world, China owns the most Bitcoin. They are controlling the dip or how low the dip will go. This is important, right? This is very important. Now we got the Evergrande crisis, right? So back to this thing, real estate, they owe 300 billion. They only got 200 million bucks in stocks. And the first interest payment on loans is due tomorrow being Monday. All right, so a part of me wanted to postpone my investors meeting. Hey Eunice, hey Titus, hey guys, good to see everyone. Right, so part of me wanted to kind of like delay the investors meeting on Thursday because I'd like to see how they do this, but I don't think they're gonna make this payment. In fact, there's a financial note that's been sent to all shareholders of Evergrande saying they will not be able to pay the interest, not the loan. Remember, when you get a loan, it's not expected that you pay 300 billion all at once, but there's a big hefty interest, probably like 20 million a month or whatever on interest fees on the loan. They can't even pay for that, right? It's a big problem, because remember, their own assets are underdeveloped. They're building 1.4 million homes, but most of them, they've just dug the foundation. They haven't put the roof. So no one can rent the house because the product isn't ready, right? So it's a company that's completely cash strapped. Fundamental analysis on stocks, very important. Now, the question is, obviously, tomorrow and for the rest of the week, if those of you guys who follow Forex Live, you actually want to see headlines like this. Because if I don't get to you on time, it's a busy week for me this week, guys. I don't even know if I'll be able to send chats in the public Telegram group. I'll do my best, but I have to focus on my corporate clients now. But you want to see a headline like this: will China bail it out? Yes or no? You really, so I mean, I've spoken to you guys. I think 365 students who've completed the course have seen me, here and there, kind of like talk to you guys about which places to go. So let's quickly come here. All right, so this is forexlive.com. I'm just going to post this now onto the chat, right? So on the live chat there we go. I've sent you guys the link. This is something that you want to peruse. You just want to make sure you catch a specific headline on this website that will say something like, okay, look, man, there we go. Chinese BOC inject funds on Sunday, brings total funds added, blah, 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 blah. Bank of China banking system. Okay, this is just into the banking system. You want to see a headline here that will talk about the Evergrande crisis, whether or not the Chinese government has agreed to bail it out, because if it has, that's going to be important, or has decided not to bail it out, because if it also decides that, that's also going to be important. We had the 2008 crisis in the markets, despite the fact that the US government did try and bail out parts of the Lehman Brothers company, right? Because most governments, if a big crisis is about to fall in your country, you can't just ignore it. So watch out for that particular headline. And for me, guys, that website, forexlive.com, I never take trade ideas there. Don't take trade ideas there. Trading is an individual personalized journey. You have to match information with your strategy, all right? But the headlines help you know sentiment. You want to know the sentiment, right? So I look at the headlines before every London session. So I look in the morning. I'm up at about 4 or 5 for my boys to go to school, then I take them to school, and I'm back, and I'm sitting down by 7:30. I'm just perusing through headlines before the London session. During my lunch break, it takes me 10 minutes, just takes 10 minutes to go through those headlines. You just want to see what's going on. So I would ask you to be quite religious this week on just catching up. Teach yourself this market knowledge, market language, the jargon, right? It's very important, right? So that's question number one. Will they get a bailout of 300 billion? Will the government want to swallow that debt so that it does not tank the entire market in China, but global market? Not forgetting what's going on here. And we should look at the China 50 chart, during this thing. But now, a couple of days ago, and I did a video on this and we spoke about it in the public Telegram group. Let's not forget what's happened in the market so far. FOMC spoke on Wednesday, all right, and we predicted everything, I think almost to a T, right, that we're going to go risk off, right? Dollar is going to get some type of strength. And a lot of people I see still don't understand what to do when that happens, right? When the FOMC gives you a specific date, if it says we might be tempering on the 4th of November, and then Leroy says that's hawkish, so dollar is going to be strong. Never forget that banks can't move money that quick overnight. DXY is still leaving a supply, or was leaving a supply. So yes, you might get one full green day, but if you look at the charts, and we're going to look at the DXY, we always start with the DXY. Markets rallied into a supply when the FOMC was talking, because the FOMC was hawkish. The FOMC was very dollar bullish, right? So Euro USD, Pound USD fell as we spoke on that particular moment. But as soon as price hit a supply, the dollar DXY to fall again, because that's the path, right? Price moves from supply to demand to supply. Fundamentals don't change that. Fundamentals complement that, right? It's not like supply and demand is just purely technical and doesn't swallow fundamental analysis, right? But that's another, conversation for another day. The point is, when the FOMC speaks, he always introduces risk into the market. There's always risk because he's already said we're tapering on the 4th of November, all right? But he also said, but we need a good NFP on the 8th of October. We need a good CPI on the 13th of October. So if we don't get a good NFP like last month, which means we don't taper on the 4th of November, right? Markets are going to panic. All right, so this coming week when I teach my live classes, I'm pretty done with the concept prices everything. Prices everything means you can see everything in the charts. But now, this coming week, as they learn all 5 types of supply and demand, the second concept is about to come, which is prices in everything. The markets price in everything. The markets take a fundamental news event like FOMC on Wednesday, and they start to price that in so that if dollar is going to be strong, the early buyers don't start buying on the 4th of November, not institutions. The institutions are going to start to remove supplies between now and the 4th if they are convinced that the FOMC is going to be there. So we're going to start to see some weakening of supply. We're going to start to see price moving as quickly as possible to a substantial demand. If they can't get to a demand, area of value number 3 in the course, right? They will create an original turn, right? That's why I teach that stuff in module 1. They will create an original turn there, but we'll talk about those charts. But this is important because if the FOMC speaks, it brings in risk, market uncertainty, right? We're not sure. Will we taper on the 4th of November? We really don't know until we see NFP first, right? And even after NFP, we just see a strong CPI the following Tuesday. Right, so there's still uncertainty, but now Evergrande has created what we call double risk in the market, double uncertainty. Guys, I know if you're just here for signals, if you think I'm wasting your time, you're very mistaken. This is important. This is absolutely important. Now, in a big crisis like this, with the Evergrande crisis, in a very big crisis like this, the question is, because remember at 365, we teach people how to trade like banks, right? And I read something on one of those public groups. Someone was like, you can't trade like a bank, or I don't know. I always feel like people are just trolling in that group, but that's what we do in the academy. Now, if we're thinking like that, we have to answer this question: who is getting screwed? Who's getting screwed? Remember, I said it's a big company. They pulled in a lot of investors, right? So banks are going to get screwed. Investors are going to get screwed. Very rich people are going to get screwed. A couple of governments are going to get screwed, right? I can show it to you somewhere. I saw Lange's comment. I was very, 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 I think in the early hours of this morning or yesterday when I was making notes, check this out, check the Bank of England. I think I left it open for you. So I just typed in Evergrande crisis on Google and I found this interesting. Europe has limited direct exposure to Evergrande's crisis. This is Lange. Lange is basically Jerome Powell. She's the Fed chair, right, for the Bank of England. Like, she's literally saying the whole of Europe as a central bank, the Euro Central Bank, the ECB has limited, it's got some exposure, right? So it's a big thing. It's an actual big crisis that is actually going to affect a whole lot of markets. So if Euro made a bad bet, if the dollar made a bad bet, if the Chinese government made a bad bet on this particular company, everyone who made a bad bet is going to get screwed. So I saw Samuel ask me to look at Nasdaq and all that kind of cool stuff. I will, but let's talk about a couple of things. When we say who's going to get screwed, I've moved back to the whiteboard. Let me just double check that I'm sharing my screen. Yes, I am. This is how I need you to start thinking. When you start thinking like an institution, you have to get out of your $100 account, your $5,000 account, and really start to think like big institutions. Big institutions have a lot of money. A lot of money. People with a lot of money are diversified in the markets. When you're diversified in the markets, you're investing in the dollar, in the euro, in crypto, in stocks, in coal, your portfolio has to be diverse so as to micro balance a crisis like this. Most rich people in the financial market sector, most of them are crisis money, all right? the most recent spurge of billionaires came out of COVID right now. There's a lot of data and research already out on that. The last biggest spurge came out into the 2013 short-term crisis. Before that, we're 2008. There's a guy called Adam Koo who writes brilliant books around this. A lot of people who know what they're doing get out of it, get lots of money through a crisis. Now, if Evergrande falls apart, they don't get the bailout. They get the bailout on harsh conditions. It's a communist party. So even if the Chinese government is going to bail them out, it is absolutely going to be disaster for them, right? The Chinese government is not going to take any deal outside of owning the entire company and then like completely punishing shareholders, essentially. Well, whatever the case is, if banks get screwed, and which they will, because I've already shown you that at least ECB, we know ECB, we know United States, Bank of Japan, a lot of banks invested in this thing. Whenever banks get screwed in an investment, there's a lot of things that need to happen. And this is what's going to affect us this week and for the next 2 weeks in the markets. It's always nice when there's so much drama just before an FOMC, which, by the way, let me just put it here. So just ignore this. I don't want you to get distracted. I'll repaste it for you. I don't want you to get distracted. Check this out. FOMC is going to taper on the 4th of November. So let's say we get a good jobs report. Let's say NFP on the 8th is positive, CPI is positive. That means tapering is guaranteed. What's going to happen? The dollar, DXY, is going to strengthen. All dollar pairs are going to be super strong. They're going to rally like crazy. If you thought my USDJPY was an amazing buy this past week, you're going to see it go wild, right? All those dollar pairs are going to outperform. They're going to, the USD is going to be in trouble because it's going to just freaking go up on the 4th of November. We like to also remind ourselves of asset classes, right? There's a term called safe havens. So gold is a safe haven. When things are bad in the world, we go to gold. But we go to gold when things are bad and the dollar is not the chosen safe haven. But because FOMC is going to taper on the 4th of November, we already know that on the 4th of November, dollar is going to be strong, right? That means dollar is going to be the chosen safe haven. Investors are actually going to stockpile a lot of cash into the dollar. Now, if that happens, all right, after this big crisis has taken part between tomorrow and up until the 4th, you can already see that market conditions are starting to steer, or at least that's how I feel. Alan, I see you shake my hand, buddy. Appreciate that, right? You can already kind of like start to kind of like see this little plan coming across. Now, who's going to get screwed? I just wanted to quickly bring you to that. I'm rushing because I don't want to lose people who are just here for signals, but I think this is so important. Now, if banks get screwed, guys, which they will, banks are, everyone, I'll show you the chart and then you'll tell me now if people are not being screwed. Remember, they had to get investors to invest in them. Now, if banks get screwed, the first thing they have to do is to sell and dump other assets. How do I explain this, man? Look, it's like this. This is my investment portfolio. Maybe one day I should show you guys my investment portfolio so you can actually see, hey, but no, that's private. But you should get an idea. So let's say this circle represents my investment portfolio. I can tell you now that over the last year, what I've managed to do is to tilt it this way. I've managed to make sure that I'm 60% in crypto, which is not smart, right? For a long-term plan, it's not smart, but I like it like that right now. So I'm 60% in crypto and then about 20% into EFTs. All right, and then index funds, etc., another 20%. Right, but now let's talk about banks. Let's say banks, it will look more like this, right? So guys, they'll be like in minerals and whatever. I diversify my portfolio by just manipulating my stocks. Essentially, I buy stocks in every sector in a very smart way. But right now, I'm very much into crypto, and there's a big reason for that. So this is 100% of a specific bank's portfolio, all right? Put it that way. Now let's say this is Evergrande, right? So let's say the bank, all banks have put in about 30% of their funds in Evergrande. So a couple of $1 billion in the Evergrande. This is like Warren Buffett, this is Ray Dalio, private hedge funds, all of them, their portfolios will look like this, just multiple diversity, but there's a chunk of it that's about to sink. 30% of your portfolio is about to be worth $0. You're about to lose all the money you have invested Because again, the company owes 300 billion. Its assets are underdeveloped, so they can't even get cash. You can't get people to stay in those houses, start paying rent. You can't even leverage the property, right? Why I always say Forex must lead to investment, investments lead to real estate, is because you got to think smart about your money long term, right? For Africa, it's the only way out. We have to start to educate and then build around these concepts, right? So now, look at this, 30% here is screwed. I'm thinking like a bank now. I'm just telling what the banks are going to do. The only way I can balance my portfolio as quickly as possible is I know there are assets in my portfolio that are just major bullish. I know I'm into things like Nasdaq, and Nasdaq always goes up and blah, 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 blah. I know I'm into things like Ethereum, and Ethereum has given me 200% already this year. I know for a fact that gold is still at a demand because institutions bought into a lot of gold. This is banks. Banks have to sit down and assess the damage. Then the question is going to be, look, man, if we take a 30% hit on our portfolio, which, by the way, is billions and billions and billions of dollars, the only way to quickly recoup, rebalance as a bank, as an individual, if you don't join my Wealthy in 3 Years club and you want to do this on your own, always remember this rule. You have to have a portion, right? So, there's just so much. So as a trader, when I trade, and I need to withdraw, I generally, outside of the accounts that I'll show you guys on public, you know, how to 2x, 5x, 10x your account. On Monday or Tuesday, I'll start trading VIX as well, and I'll be recording that stuff just to show you the difference between Forex exchange and derivatives. But I'm still back testing that with one of the 365 students who happens to be my little brother. He loves VIX, so we're going to publish a V75 video on the next 48 hours on the channel on how to back test with supply and demand. But as a trader, generally speaking, in my main accounts, I have one withdrawal, generally speaking, per financial quarter. That's just how I am, right? I literally like doing that. When I get my withdrawal, I split it immediately. So 40% of whatever I've made goes into my investment portfolio. I invest it. I tell myself I'm worth so much more into the future. I love myself that much. I also understand how hard I've worked to get here. And the only way I can show myself today that I'm doing a good job is to make sure that my tomorrow is perfect. You have to think like that. I've got two kids. I have to think like that. So I immediately, before I pay myself, I go buy a car or whatever, I throw money into my future. Very important, right? It's a habit, right? It's good financial education. And then 60% of that particular stuff, I then do whatever I want. 9 out of 10 times, I'll start over adding into my stocks or whatever. And then if there's enough money that's built up, I leave cash in hand. So 60%, I leave 20% of every withdrawal as cash in hand, because I never know when crypto is going to dip, right? We can read supply and demand, and we can tell there's a flash crash, but we remember with our rules, we have to see an imbalance first. So when an imbalance is being created, you need to have cash on hand to make use of that opportunity, right? This is an old school Warren Buffett thing. Sometimes it's an opportunity to buy, but you don't have money. You because you ate it all, you spent it all, right? And then we live healthy with whatever is left over, etc., 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 etc. So 20% of the 60% that's left over is cash in hand. Banks do that too. But the most important thing that they want to do, which they will do in such a time, is they'll take these assets that are overheating, the Nasdaqs, crypto, whatever it is that's done so well for them in that particular year, in the last 2 years, whatever it's given them return upon return. SP 500 guarantees you an 8% return every year. If the banks have been in SP 500 for the last 20 years, you get my drift. Return upon return, to kill those. So you start to take profits. You start to close some longs, right? You start to close some longs. This creates a ripple effect, an avalanche of downhill trading in the stock and Forex market. If I start to dump other assets, if I start to close the stocks that were doing well for me throughout the whole year, I start to create a ripple effect in the markets. If you guys remember at the beginning of this year, we had the GameStop thing, where retail traders were created on Reddit, right? They started to literally organize counter buying. So financial companies, hedge funds, funds were trying to kill GameStop. They're trying to sell that stock, but it's an old school thing. A lot of guys like the old games, blah, 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 and they hate capitalism, blah, 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 blah. So they started to pump it up. So they organized a buy, and Reddit did that a couple of times, a couple of months, and pushed that stock up crazy, right? Like it went up to like $300, a stock that was almost worth $5 at some point in time. Something ridiculous like that. So if Bank 1 does it, and Bank 2 does it, and Bank 3 does it, and Bank 4 does it, and Ray Dalio does it, and Warren Buffett does it, and another big private investor does it, if all the whales in the market start to dump other assets and other investments to make up for this 30% loss, you're going to send panic into the market, right? And then there's a ripple effect. Crypto will go down, long-term stocks will go down, all these things will go down. And in that particular moment, your portfolio is hurting. But at the same time, this is the only thing in the market that looks like an opportunity for someone who's prepared, someone with cash on hand, or someone who's like a trader, right, who understands how to build accounts, right? Because all these stuff is not to say Nasdaq is going to be broken forever and now you can't. No, it's just going to create a dip that you rebuy. So that's what's potentially coming. There's going to be a massive sell-off on stocks, another bond, and potentially a dump on crypto. And we've been seeing, reminiscences of that, right, guys? I apologize for this intro. It was fundamentally not only exciting, but I think very important, at least that I break this stuff down. Now, I just want to quickly show you the charts, 2 charts, and then we can start and I can finally slow down. So this is the stock profile of Evergrande right now. The arrow shows you January this year, right? Now, most of you, when you take my course, you're really into like Forex and then a little bit of crypto. I have noticed that a lot of you don't really understand or enjoy Lincoln or something like that. Good to see you, man. Thank you. Sorry for mispronouncing your name. Good to see you. Shake my hand. Right. A lot of you are into Forex and that's fine, and crypto, right? But in the stock market, supply and demand number 4, Talitha areas, you see it a lot in the stock market. You won't see it frequently at the top. You will always see it at the bottom. Talitha areas mark a lot of market consolidations. These ranges are called insider buying. It's when governments and big private institutions and top executive shareholders get the first pick of the apple. They get to buy first. Why do you want to buy first in a stock? You want to buy low. Why do you want to buy low? Because all this money is big moolah and profits to you. Now, let's think about it. There was a substantive amount of time for this company to create the reputation it had. I mean, literally from 2009, in the last financial crisis, it started as low as having a stock call between $4 and $6 per stock. So you could have bought, $1 to $6. You literally could have bought a stock, literally had a full share if you just jumped in with $1. Over time, up until about 2017, this market rallied to its final high, right? All the way to $32 per stock. So just to give you a better way to understand it, if you bought in 2009 the stock up until 2017, which is just under 10 years, right? And you held it, right? You would have made 1,531% in return over your money. And a smart investor knows you don't stop buying, you just keep buying, you keep buying, you keep buying. All these little dips here between $1. This is literally what we're doing in the crypto right now. In the crypto, we're trying to buy tokens that are below $1 that we think can get up to $5, $10. That's the story of Ethereum. Now we're thinking Ethereum can make it to 10,000. XRP above $1. Next target 5. Cardano, right now, hopefully can get to $10. For those of us who bought it at $1, in cents, we can buy. Imagine it's $1 US. If you take, how much is my course? $200 US. That's the course right now, the price of my course. Anyways, live intakes are done. I'm not marketing myself. You can't enter. It's done. We're done for the year, taking people in. But I'm saying, unless if you do the remote course, of course, but for the live classes, we're done. But if you took $200 US, just 200, you would have bought 200 stocks in this share in 2009. And after a while, it will have gone up 1,531%. Now, in 2017, we start to see a turn, right? A downturn, and it's nothing too crazy to worry about. Now, 365 traders, I mean, everyone who's watching, I appreciate you, but just real quickly, 365 traders, this is interesting because price is everything. It's interesting that price is in everything because the Evergrande crisis is a 2021 problem. The Evergrande crisis is a 2021 problem. Now, if I could just talk to my people real quick, you see the situation here? Number one. Number two, you see this bearish engulfing pattern there, right? So that's the sign number one, all right? Sign number one. Smart investors out of gotten out there. If you go through their reports, they lost about 60% of their investors here, right? Simple. Then they called more. So that's when the banks started to come in because ain't nobody willing to buy up here, buy low, sell high. So markets tanked, and I believe there was old investors who came back into the stock here and new investors who came back into the stock here. All right, so old and new started to resurface in June 2018. So the people who are about to get screwed haven't been in that stock for a very long time. All right, they've literally been in the stock for a few years, since 2018, 2019, and then there was COVID, right, etc., etc. So now price was rallying back into a supply just before COVID, right, 2019. Now look what happens here. I've got a supply drawn there because of that, right, bearish engulfing pattern, and it's the only real supply that I see standing. Like all of these are just, traps, essentially. Now markets spend some time, and I hope this thing moves fast, right? So hit, make contact, weaken it, glass effect. All of 2019 was a flop. Price was dropping down, but it's still good. This is still a very profitable stock at the time. Makes contact with the demand, but now goes a little bit deeper. You see how this demand held for a while, right? And then markets are now going back up. January 2020, markets create a bearish engulfing pattern right there. And then boom, prices break the demand. Prices broke the demand March of 2020. Now, if I've taught you, been following War Room, all your risky assets, Euro USD, Pound USD, AUD USD, on the same March of 2020, markets were recovering. Nasdaq, go find Nasdaq, March 2020. Nasdaq fell from February 17 until the 2nd of March 2020. So all risk-sensitive assets were recovering in March 2020. This asset was breaking demands in March 2020. And then it catches up with the recovery plan, but it's removed. Look at it's removed. Forex markets do the exact same thing. Don't get fooled. They will first remove an area of value. Why? To create a clean path to come back down. Now, this is January this year. Oh, no, sorry. Oh, what's this? August, July 2020. So from July 2020, price finally makes it back to the supply after removing a demand. Price makes it down. There's a little bit of a fight, reminiscence of some buy levels here. Now we're in December, and finally we're in the year 2021. That is March 2021. Risky assets, Nasdaq, Euro, blah, blah, blah. Banks were taking profits from their recovery from 2020 to 2021. This asset, after a year, from March 2020 to a year of March 2021, has gone full circle. It has gone up and come back down, literally in May 2021, and then we continue. So now this is this year, this is June, July, August, September, right? The Evergrande crisis starts. Now, when the crisis starts for order block traders, watch that. This is literally the beginning of March. March broke a demand here, right? This demand. And in this March, this year, March, a fresh supply was created. And price has been tanking there since. It took them 10 years. It took this stock 10 years to make it to this high. It took it 1 year to drop this low. And now I think the stock is trading at about $2, at about $2 US. It's a terrible, this is not a dip. You know how we like to buy the dips? This is not a dip. Fundamentally, this stock is broken, right? No matter what intervention happens. Now I'm going to quickly go to Bitcoin. This is important, please. I hope it's making sense. I'm trying to make sure those people are going to see buy opportunities and stuff like that on Nasdaq and all that stuff. Be very careful. Unless if there is positive news like that, there's going to be a bailout, it's going to be favorable. The Chinese government is going to make sure all the suppliers continue building the houses and they're going to recoup the money in a 10-year, 20-year plan or something like that. There's our supply. All right, we've spoken about this Bitcoin level. This was the Elon Musk. The first time he said Tesla is not going to take crypto. And I said, Elon Musk doesn't move markets. Don't believe the hype. If you simply drew a Fibonacci from the first time Bitcoin was banned, it was in Turkey or wherever it was banned. There's a one country that banned crypto in April. And if you draw a Fibonacci from this point to this point, markets go to a golden ratio. Bitcoin was going to fall. Whether Elon Musk tweeted or not, Bitcoin was going to fall. Then I said, market memory, there's sellers here. Don't forget, price is going to arrive. It arrived. It is falling. This dump might continue. Because I keep warning people, right? And people, I don't know, I hope people are listening. I don't care how up or how far above Bitcoin goes. I don't care if Bitcoin makes it to 100,000, right? I always want to have cash on hand, at least to buy one more coin. And I'm only buying one more coin, a full coin. I'm going to keep buying fractions. I literally every month we buy into different cryptos. But a full coin, if price comes to 20,000, why? There's a lot of money there. There's still a lot of orders in that 20,000 mark. But the true institutional level of the next best buy for Bitcoin for whales is all the way down to this 12,000 US dollar mark. So for me in my head, as much as I get excited about cryptocurrency, the reality that Bitcoin can come all the way down here is not far gone. I don't fool myself. I buy every single dip, don't get me wrong. And I'll do a separate video on my Bitcoin strategy, how to get interest on it, etc., etc. But I'm saying, as excited as I am that we're here, I have no problem in my heart as someone who's been buying crypto for a very long time, watching my portfolio come all the way down there and then do this. I have no problem at all before going to the 300,000. And I also have no problem with this taking 2 to 3 years. But I know it's happening because there's no ways we can leave so much money. This is an order block, number one. Number two, it's a fresh order block. So that means the money put into that area has not yet been used. There's been no extraction. There are a lot of orders there that need to be used. And there are crypto whales waiting for that. In the same way I said 2 years ago, crypto was up here in 2017 and it needed COVID. This is March 2020 of COVID. You see how I said all your risky assets in March 2020 recovered? Bitcoin also recovered because of the crisis. But for it to recover, for Bitcoin to be where it is today, 60,000, 40,000, 50,000, Bitcoin just a year ago, guys, 365 days. If you join my Wealthy in 3 Years program, please don't join if you don't have a 1 year perspective. If you can't hold your funds for 1 year, it just took 1 year. Bitcoin came, and we spoke about this on social media. I literally tried to hype this up. Bitcoin was as low as it could ever be for you. It literally dropped to about 3,800 US dollars. You could have bought a full coin if you're financially capable. You could have bought a soldier car and bought 2 coins. Something stupid like that. Or you could have bought whatever you can afford. This demand is what caused this damn thing to rally all the way up to 60,000 US dollars. And along the way, they left money here. This is a big time frame. You cannot ignore a single order block. Damn, we're out of time, guys. I need to do a war room, but I hope this has helped someone. I hope you see the big picture. So I anticipate blood on the streets, number one. FOMC has already set the scene for a strong dollar, strong safe haven. Risky assets are naturally in trouble. Evergrande crisis has doubled market uncertainty. When there's market uncertainty, there's a lot of volatility. For you as a trader with a small account, be very careful. You will need to be 10 times more awake this week. Your order blocks have to be either perfect or you don't take the trade. They will be doing massive liquidity rates. If banks are being pushed to a corner where they have to recover losses, they will do it with your accounts too. All right, so please watch out for that. So let's start tonight's war room. And I appreciate those of you who are still around who've been patient enough for me to get this out, because I won't be able to do another video around it. I'll just cut this out. But I thought it was important so you really get what's going on in the market. So there's Nasdaq. All right, this is Nasdaq. This is that COVID level. I always want to keep track of it because markets did a weird recovery from that level there. So for me, it's just always a case of will price return, and if not, that's fine, right? So let's just remove this. Don't worry about the lines. They will get clearer as we drop down to smaller time frames. These are not support and resistance lines. In fact, we don't trade support and resistance. 365 Trading Academy. We don't use indicators. We are supply and demand traders, right? So guys, we had a couple of demands drawn on Nasdaq, last time, if you guys will remember. And we really generally always start on the daily time frame, right? So this was the last time I gave a Nasdaq signal where there was a fresh touch buy and a retest. So this is all there in our public Telegram group, and then we stopped because price was going to sink. Areas of value are extremely sensitive on Nasdaq and crypto pairs, etc., etc. So we never expect price to stay at that level for a very long time, right? On the daily time frame, there we go. Markets dropped into a daily chart, right? There's really not too much, nothing surprising here, right? All our rules were met. And then in terms of our strategy for Nasdaq, if you're a 365 trader, you are aware that, you find that 365 beautiful number, and then you always leave anywhere between 25 to 30 points. And that's exactly what happened in the markets. Price literally stopped here. If I draw a line across of where markets really bought, so that we're looking at this pink line and start to do an MTA, I'm pretty sure. So there it is. So markets literally hit that pink line just above our 14,800 mark. And I scroll to the left. I'm not even in a single Nasdaq trade, right? There we go. So we've got a very fair value-based demand. And there's the area of competition. Look how perfect that is. Your area of competition is this week, and it's literally sitting at 14,800, and price just took about 25 points higher and then rallied. And then you could have bought there, you could have bought there. There were three big opportunities for a swing trade. And there we go. Price comes in once, you missed it, there it is again. A new order block is created, bullish engulfing pattern. This is the stuff that makes those funded account challenges so easy. I mean, I've done FTMO 4 or 5 times because they allow you to trade indices after you pass. It's literally just tracking order blocks, right? Price is sitting there. Here's a supply, it's broken, all right? So that's good news. That's very much good news. But I would pause on any more buying. In fact, I would wait for markets to come here for the first risky buy. I am not a Nasdaq buyer until I get a lid on this crisis. I'm not buying any stocks until I get a lid on this crisis, okay? That's for me, my strategy. I wanna watch markets because even this area of value here is not fresh, all right? So let me show you what I mean by that. Never be fooled. Just because you don't see a red candle, a touch is a touch. So let's do this. So let's say we were, a couple of weeks back or this week in the market. So this buy happened this week in the market, right? So let's draw the buy as best we could. There we go. So there is my order block. And then we're gonna calculate 30 points from the 365 number. So sorry, man, from my area of value, what's going on? Have I forgotten my own rules? So there's my area of value right there. I'm gonna do 30 points just to be safe. And you guys, I've covered the stuff, so you guys know who's allowed to trade Nasdaq. You kind of like know your account size, right? I'm just gonna leave it like that. So it's almost 29 points, as perfect as it can be. And if you notice, it sits right at the top of the bullish engulfing candle. So buyers bought here, close there, buy low, sell high. So that's the close of this green candle. And naturally, we're gonna see our price play pause, right? So that came in quite quick. So markets literally dig back into the entire area of value, right? Literally taking most of your points out. So that's why that's very important. And then I would consider this a fresh touch. So this area of value already has a fresh touch. Markets did come back for us. right? The replay happened quite fast, but essentially there were sellers came in. If you go to the H1 time frame, you will see them. There we go. H1 time frame, they are sellers, came back in here on the H1 time frame. You can also see other order blocks at play, right? So just right outside here, there was an attempt to retest this bullish engulfing pattern. On the 1 hour time frame is the price went too deep, but on the H4 time frame, this little candlestick, this red one, trying to retest it on the H4, you'll see it's literally driving price in perfectly, right, into this area of value there. So that's basic stuff sorted out. So markets rallied there. I right now am not interested in buying Nasdaq at all. I'm also not interested in just being in a rush to sell it. Let's see what the H1 time frame looks like. So yeah, okay, fine. So the supply is not broken. It looked broken on H4, but the supply is not broken. What's going on here? I'm confused now. Right, so we can do this. So order block on H4 is this big. All right, that's fine. But market stopped here. Can we just tag where market stops? This is where market stopped. And if I go to the 1 hour time frame, right, so this is where market stopped. But if I go to the left, this 1 hour supply is not broken. The H4 supply might look broken, but holistically sellers are hedged all the way here, right? Because this is an order block that we can't ignore, right? We definitely can't ignore all of the things. Yes, glass effect, all this stuff, guys, I completely agree with you. But unfortunately, that's a problem. That's problem number one in Nasdaq. Here's problem number two. Let's say we decide this is broken and it's done with because H4 has removed it, and you wouldn't be crazy to think like that. Here's problem number two. Well, what do we do about here? Price has created another one here, right? So all these things for me are scary. And then problem number three is, sure, we see an H1 demand there, but look how far away it is. That's about 60 points away from here. I don't trust it. All of this has been used up to get to this bullish engulfing candle. I don't trust it. Markets could, there's a high probability that if everything is normal in the world, blah, 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 markets could do something like this and continue on their merry way. I don't trust that though. So for me, this is not a good buy place. I don't want to buy that high. I could wait here, but look at the massive indecision of this week. I don't like it, right? And this was the FOMC candlestick on Nasdaq. I can identify these things anyway. On the 22nd of September was Wednesday at 8 p.m. when the FOMC was talking about tampering. First, he said something like, we're not going to tamper today. We're not going to increase interest rates today. Boom, Nasdaq shot up, crypto shot up. Halfway through his speech, when you're saying, but on the 4th of November, we will be, boom, all these things came, crashing down again. And the following day, there was a recovery, right? The dollar started hitting a supply, the Nasdaq started to go back up, right? So I don't like this. This is a very emotional candle. Look at the wicks. So I don't want to buy there again. Right, so then that leads me to this area of value that tested the true demand, right? Waiting all the way at 5,100 as a start. But you're going to have a lot of capital to sustain this beating, right? This is not Talitha area, price wicked all the way down, then exploded, number one. Number two, this area was also tested. So for me, you can tell I have problems with these levels. I just don't trust them at all. So I'm not buying Nasdaq anytime soon. And there are so many other indices. When American indices are a hot mess, just go to A200, the Australian index. It does okay. It's stable. It makes money. It really doesn't need much. I'm just trying to find the ticker. Does anyone know? Is it SP200? Something like that. Just depends on your broker. But on one of my brokers, it's called the SP200. And then there's AUD 200 or something like that. AUD 200. I don't know what's going on. I haven't traded in a very long time, but I do know it's extremely stable. Let me just go 200. There you go. AU 200 AUD. So the Australian 200. This thing makes more sense to me. You can almost trade it like a currency pair. Like it literally respects zones. Oh, that's quite interesting. And that's quite nice, right? Price broke through demands, finding a lower dip. This was the best thing that could have ever happened in COVID last year. Literally the best recommendation I've ever given to corporate clients was to buy into this thing, and it just broke all these demands, and then it's fully rallied. It rallied and recovered slower than Nasdaq and Dow Jones, because we were only literally breaking even, you know, sometime in about January 2021, whereas Nasdaq, Dow Jones, SP 500 by January they'd recovered in 2021, but this one recovered in June, right? But nonetheless, there's been a perfect rally, right? This thing runs perfectly fine. It literally runs. It's safer to trade, not safer, but it's easier to read, right? It's easier to read. It is linked to the Chinese market, though, so be very careful of that. But you can see on your weekly time frame. Well, when it breaks demands using big candles, and when it goes up using big candles, right? So it's a better index to have in your pocket. So just watch out for that, right, guys? Can I then now talk about currency pairs? I think I've done what was needed. There was USDPLN, which was requested in our Telegram group. The Polish, I literally. The other one you asked me to look at, Alvin, USDPLN. I've got such a weird story about that pair. I haven't traded that pair in 4 years. It was just, I think I wasn't ready, so I never went back to it actually. Right, but this is USD Polish Swiss, and just be careful. Not all brokers will have this pair to trade with, right? You can trade it on something like Evergrande will have it, definitely. Saxo, maybe capital.com, but the other popular brokers in South Africa hardly offer spread for this, all right? But in any case, we've got a clean asset, right? This is the 2008 crisis, all right? And I keep emphasizing this stuff in my classes. When you're looking at an asset, just for your own sake, because I think a big crisis is coming, find out what type of an asset it is, all right? When you're looking for assets, find out if this is the right asset. This is the asset you want to take home to your mama. When there's a crisis, this asset did very well in 2008, which means Polish Zolts, or however you pronounce it, suffered during the crisis, to a point where even though the dollar was suffering during the crisis, the dollar was far much more stronger than the Polish rate. So the USD was bullish, right? So you want to buy stuff like this during a financial crisis. AUD-CAD, AUD-NZD, anything that became more bullish in 2008 is going to become more bullish in the next financial crisis, which is really very much around the corner. Right, so doing that, I've also found my major turning point demand, but today is not a class. So let's just find some trades, right? So we've got a weird roof there. I'm just going to move quickly and find my immediate areas of value. If you're new to the war rooms, I apologize. I'm not here to teach. I don't teach in war rooms. It's just about signals. Broken supply, which makes sense, by the way, because this is clearly a buy profile asset, has been a buy profile asset since 2008. We expect all our buy profile assets to remove supplies along the way. Broken supply along the way, broken supply. Here's another broken supply. Why? Because markets in general want to keep going up. So I don't, hey, Josephine, shake my hand, appreciate you. I don't really, see anything too wild here. What I would say is, even though there's a broken supply, just watch out for that, number one. Number two, watch out for retail traders sitting here, because retail traders are going to start playing market memory games and essentially creating resistances and believing that price will retest areas and fall again, etc. That's what I would watch out for. As a 365 trader, you must remember glass effect. That's all you need to remember. You need to remember that these areas of value are extremely sensitive, and the more times price returns to them, the less likely they're going to work. Retail traders are taught the opposite. They're taught to hold on to these areas of market memory because it means it's strong, right? That's the trap. They want to buy from whoever is going to be dumb enough to sell here again, right? So the selling worked once, price got in and went in deeper. This is your first sign. When price gets in and goes in deeper, it depletes the order blocks inside. And then price, let's say this was a new supply. on the weekly time frame, right? Let's say this was a new supply. Look at how price managed to stop here to weaken this supply, right? So they are very much on a very big mission to kind of like weaken this supply. Both supplies, half of the order blocks on both supplies has been used. So I really don't believe there's anything holding price there. Problem is we are not silly, so we're never going to buy that high. So we actually need to wait for a pullback. We actually need to wait for a pullback. And there we go, got a bearish engulfing pattern on the daily time frame. Like that. And we've got a couple of things going. I did a brilliant one-on-one yesterday with one of like, guys, I know some of you already want one-on-ones and they're coming. I just had to first finish my backlog of people I promised, right? So Samuel, I know you're coming. Mr. David, I saw your broker statement. Well done for doubling your account, David. Mr. Lamini, I'm coming to you. Eunice, I have not forgotten about you. And Sia also on my calendar. So I'm going to send you guys an online doodle. You'll see how we do them now so that you can actually book your slot. So I'm up to date, right? But there we go. We've got a fib. The potential of drawing an accurate Fibonacci. Why are we drawing a Fibonacci? Because we're not really convinced of a market reversal. So I'm not convinced that this is going to be a deep long-term sell trend. I'm drawing a Fibonacci, and it's tricky to make this argument. I won't lie. Why? Because number one, this is the first time markets are arriving at least at this daily supply, right? It's literally the first time markets are arriving at least on this daily supply. I just want to check the left. Okay, so we could do something like this, which I'm not really a big fan of, right? So there's this here, markets drop, fresh touch, retest, and almost touch. Yeah, so I kind of like still stand by the fact that this area of value is weak, right? And in fact, what I've just done is prove that price has really returned here a couple of times. But if this daily bearish structure here was to kind of like want to be acknowledged, and you can see it is being acknowledged right now. Price arrived at the area of value, another bearish engulfing pattern was created, then we could see some downside. But for me, it's all retracements. I do believe the bigger picture will going up. Right, so there's my golden ratio area. I've drawn a bullish Fibonacci bottom to top. If you haven't learned that in class yet with me in module 2, don't worry, we're going to get to it. Right, but that's my golden ratio area, and it's confirming a very powerful place to buy, and so we're going to take it seriously. So even though markets are bullish and markets will most likely break a supply, the only time I can take a buy on this chart, if I was to take a buy on this chart, would be somewhere here on the daily time frame. We just see what the H4 time frame looks like. Right, so this happened, price left. Then this happened, then price left. Then this has happened, price has left and not come back. Right, so yeah, I'll leave it as it is. I'll leave my area of value as big as my daily area of value, only because markets might return here. Now, I understand if you draw your area of value up until there, it's like that. That makes sense to me. Right, so that's my area of competition, and I'll take this week here as a good place to mark my stop loss. So week to week, something like that, just drawing the lows and the highs of that particular area of value, and then noting that you're risking about that's a lot. Yeah, you can take the trade but reduce your lot size. This area of value is very big. I mean, it's a weird pair, right? It's got the potential, but almost 300 and something pips is just too big. So I'll take this with a small lot size and then hold and swing. Right, so I'm hoping for retracement for your sake somewhere here. And if with me, normally I'll take 2 trades and then I'll close one here, right? And then, or somewhere there, we'll see. And then after that, the second trade, I'll just move it to break even and then let it run for like as long as possible, as long as price can there. Because if price was to break this yellow zone here, which is the daily supply currently holding price back, there's nothing else. You see this there? There's no green candles. There's absolutely nothing else until price gets here. And that's your next big target, right? That's really your next big target for a swing trader who knows how markets operate. So I would hold that second trade that way, or that one trade that you're going to take, but reduce lot size. Reduce lot size and make up all the money from reducing lot size by swinging the trade. Okay, hope that helps. USDPLN was the final chart someone asked me to look into, and I've got to tell you, I don't like it. It's just ranging. I do believe price will break out of it, but it's just an ugly range. Just an ugly range. And I'll show you what I mean. Okay, so here we're slowly moving forward. Oh, these are information lines. I apologize. Stress and just clean trend lines. Right, so this is generally speaking, you know, the formation of some type of upward structure. Price is clearly moving from in a trend line, or in a channel formation rather, into a supply, right? That's the NB and all of it. And this is the supply we're talking about. You can increase it to look like that. This is a supply, and then markets hit their fresh touch, markets drop, markets have been accumulating nicely and surely, nice and slowly into this area of value. And I really generally want to sell. I will be selling when price gets up there. Right now, I won't be shocked if in the next month of October we get a red week, just so that price can reactivate this particular order block, so markets can go up with it as well. Right. So that's pretty much it. Really, there's not much. If I can do a drop down analysis on this pair. That's weekly. And remember, on the monthly time frame, the bullish engulfing pattern needs to get retested. So price needs to go down for that retest to happen. And then we can say this is a first demand. Right. So this is on the weekly time frame. This is your range right now. This is my range here on the weekly time frame. If I go to the daily time frame, daily chart, this is what I see. I see that the true sell area of value is somewhere there. I see that price dropped into a demand. That makes a lot of sense for me. I see that markets turned on the weekly demand, but not necessarily waited to turn on the daily demand, because the turn for the daily demand is all the way down here. I can see that price decided to create a new turn there. Something like that. And now this is where price is, right? So price is literally leaving a big area of value, big enough anyways, daily area of value inside a weekly supply, and it's dropping. From a daily perspective, if you're very bullish on it, this is the first place markets are gonna chill, which reminds me of what? USDPLN, when we had the exact same setup. Exact same setup where markets might be doing something like that. So I wouldn't be surprised if this stops here and then goes all the way back up, right? So this is kind of like a place to take a risky trade. I say risky because there is a demand just below. Let's see how far it is. Yeah, it's there. It's quite substantive. So this might be outgo 2%, 1%, depends on your account size. If you're on $100 US, etc. You know, you can go 0.01, which is 5% of your $100 US account, which is fine, but I wouldn't be too excited. Remember, as long as we're not getting turning points, all these trades are B class, C class, right? B class, clickers. Please check. All right, cool, Mr. Sia. Good to see you, brother. Let me just quickly take a note of what you want me to look at real quick. I was just actually dealing with the other chart. So you want to look at Euro AUD. I think that buy is almost over. NZDJPY. AUDJPY, and then pound with the Swedish something, or Swiss cross, or whatever, SGD. Right, no, not a problem. We can go there. We can go there. But before we do, let me just quickly show you guys one of my own trades for this coming week, pound USD. But it's a wait and see type of trade. it's a wait and see type of trade. So maybe let's do the analysis first, and then I'll come back to all my notes that I put out yesterday or early this morning. I just don't remember when I've done all these charts. Right, so this is pound USD. Guys, let me show you something. This war room is gonna be weird because pleasure, buddy. I'm burning out, man. My energy levels are starting to tank, and I apologize for that. But I have been up since 4, trying to track this crisis, catching a crisis. You know what inspired me to get into financial markets as a field of study and research was the fact that Goldman Sachs, JP Morgan made most of their money from the Great Depression, 1935, right? The original Sachs and JP Morgan, 1935 Great Depression, the crisis. And then I read Ray Dalio's book, which is like 1,468 pages, are called The Debt Crisis. So he's explaining the booms and busts. Ray Dalio today is fundamentally the best hedge fund manager in the world, right? It's just not in media like Warren Buffett. Warren Buffett is a great investor, but top hedge fund manager is Ray Dalio, hands down. If that man writes a book, I buy 3 copies, I read all of them, because damn, he's on it. And he speaks about the debt crisis, so the American debt crisis and how it leads to the housing crisis. And he makes a very good argument. It's a map for you to get checks and balances of how to quickly predict the next crisis. And then, interestingly enough, last year I kept saying this decade, 2020, 2030, we believe markets move in 3 months in a 1-year take profit target and a 10-year plan. This current 10-year plan is what we're going to call the lost decade. The last lost decade was the 1935 Great Depression. Right? So it's kind of like a severe crisis. If you look at Africa, you look at unemployment, you look at economic statuses, you look at junk status, you can see all the signs are there. You just need someone to put it together. All right. But most of the signs are there. Right. So I was kind of like looking at this kind of stuff at 4. So I am a bit, worn out, but I'm going to do as many pairs as possible. All right. Just so that those of you who attended, really, it's well worth it. But before we look at pound USD, guys, you know the rules. Before we look at a pair, let's first look at the dollar index. And then, Mr. Sia, I'll come back to all your trades. Oh, yeah, right. There we go. Someone's asking for pound USD. I am already there. Let's look at this, baby. Let's look at our baby, because the dollar index, guys, has been our saving grace, right? Generally speaking, I never crossed the road before checking my left and right on the dollar index, right? So I think someone asked me, like, these PPIs are starting to annoy me. I did this for someone in the public Telegram group, where I was just showing them that all of these were positive PPIs. These were news events, right? The PPIs are very important, like they're like CPIs, all right? But I was telling them that all of them, the dollar passed. But even though the dollar passed, like it was positive for the currency when the news came out, price still fell. Why? Markets were leaving the supply. And that was my point when I put all these things on the charts to say, look, man, at the end of the day, price will simply just do, what structure is telling it to do, because that's where the money is, right? The news event is used to lower in buyers and sellers. If smart money wants to buy, they're going to make you believe in a sell. It's as simple as all that, because if I want to buy a car, for me to have the car, I need someone who's willing to sell the car. If smart money wants to buy, they'll make you sell. If smart money wants to sell, they'll make you believe you need to buy. It's simple, right? So this is price, and this is better. My charts are much more cleaner like this. 16th June, I never want to forget about this. Daily demand. All right, so now let's look at this thing, man. Look, we were selling like crazy. We hit a daily demand the first time in June, July. We bounced right on top of it, right? Just basically, if you think about it, my area of competition is this big, right? Doji candle here, blah, blah, blah. We bounced there, right? And then markets went up. And then markets came back from this supply, created this supply, beautiful imbalance situation here, and then markets fell. And then this supply was never going to work. Why? The signs are there. I don't want to say it's hard to blow accounts, because it's not. No, I want to say it's not hard to blow. It's very easy to blow accounts, and that's just part of the game. Like I still have all my statements from 3 years ago. I've lost in total about $51,000 in general, like in 3 years. So it's not like all at once. Like burnt through our savings. My partner sold cars, sold bikes, sold everything I had. And in total, in a period of 3 years, blowing and making money, blowing and making money, blowing and making money, losing profits, blah, 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 blah. I've lost a lot of money. So it's not, first of all, when I say these statements, I want you to know, I understand that you're losing and you're losing money and it's difficult, blah, blah, blah. I get it. It's part of the game. But at some point in time, like me, it took me 3 years. I didn't have me. I didn't have the leeway that some of you guys have now. Right? I had to go through a lot of courses, learn a lot of junk until I found proper stuff. But in that time period of finding proper stuff, now I can honestly say, for me now, I can take a loss like a man easily, like a champ, no problem. But a lot of the times, the signs are there. The signs are there in the market. Now, let's look at this chart correctly. You see, this is the supply that started the move. End of August, and then there was a new supply just before September started. We want to take the sell. It's a supply. Markets are leaving a supply. We want to take it, right? We expect the dollar is going to be weak across the board. Price arrives at a demand. So when markets are coming back to that supply, if you're just paying attention as a trader, on the 7th of September, markets make a move back up. If you're waiting to sell here, that's okay. There's nothing wrong with that. That right now, in hindsight, and at that moment in your life makes sense. The problem becomes a situation like this if there's nothing in you that becomes risk sensitive. Right, so the markets hit the supply. And sell. What's this? 365 traders, what's this? Price failed to drop. They hit a supply that's in the middle of the journey. Sell high, sell low. Sell middle is the low probability area, but price sold for a day. But now you are here as a trader. Maybe you want to sell again. Maybe you're still holding, you haven't taken profits, and now price has gone back up and you're not entirely sure. This is where I start to kind of like make noise if you've done the course. This to me is slowly but surely starting to look like a bullish PCP. Yes, there's a bearish pattern, but then price failed to drop. Then there was a retest. Then markets went above it. Why would price go above this? If this bearish was strong enough, price would go below, not above, right? So I talk to myself in the morning when I'm looking at my charts. On the H4 daily, I'm like, okay, fine. So what do I expect to happen? Do I expect to see any type of selling? No, I don't. You see that there? Before they can remove a supply, before you can use an area of value that is bound to make you lose money, check the last place. I'm literally teaching module 1 of the course right now, right? And I'm trying to take it as slow as possible, right? Returning students, you're more than welcome, because it's really important to stress this. And the new concept we've added to the course, I will kind of like make a few changes to the remote course and update some videos. The more better I become, you know, etc., etc. But the new concept I've added is always look at where is price right now. I'm trying to make, because sometimes when I talk to my boy, 7 years old, I have to like really get down to his level. And I've noticed the more times I spend time with him, teaching him charts, the better my conceptual analysis is to explain it to adults as well. Where is price right now? That's the most fundamental thing. Then you work backwards. You start to create a blueprint, right? You start to go, okay, price is here right now. Where is price coming from? So your trading plan needs to have this as a checklist. If you can tell me where price is right now and where price is coming from, you can always answer where is price going. If you can answer where price is going, you can't say markets are random, because they are not, right? We can track smart money. It's not difficult. We can get out of all the trading groups you're in. I'm not trying to promote 365. If you're in 10 free signal service groups, 15 Forex groups, and you've got 15 mentors, your account will show you the result of that confusion. You don't have to choose me, but stick to one thing and make sure the one thing you stick to answers these questions for you. All right, so where is price right now? That's question number 1. Well, if we cut back, let's cut back. We're looking at that supply. Let's say we want to sell again because our rules tell us it's a supply and we can sell again. The moment this happens, where is price right now? Well, price is inside a supply. This is where price is right now. And still, there are many reasons why you should not have sold here. Number one, glass effect, right? It's done. This is what I'm trying to say. Read the signs. Don't get the stop losses that get hit should be the ones that happen when you're sleeping. It was 3 a.m. You're a human being. You had to go to sleep. That's okay. But things that you can monitor and see coming. Glass effect. Rule number one. Already here, we know what they're doing. Two things, and we know that retail traders are going to track resistance. We know that if a retail trader says resistance, we go against our brothers and sisters in the markets. We do what smart money does. If retail traders are saying resistance, you go find a good place to buy, because retail traders are wrong about the markets 90% of the time. So they first weaken the supply. Where is price right now? Here. This is where price is right now. Question number two, where is price coming from? Well, damn, it's coming from an order block. They created a demand, right? So if markets are coming from a demand and they've weakened a supply, where is price going? Well, God damn it, it's probably going higher, right? It just becomes like that. And then slowly but surely, you keep back testing the stuff, boom. So markets removed an area of value, right? A DXY area of value. It's such a weird war room because I'm teaching a lot tonight. Not cool. Not cool for me, not cool for you, right? But anyways, price hit a supply. Long story short, price started to fall, right? Then we have the interference now. So now check this out. I want you to see how planned this stuff is. Then I'll get back to the few signals and the few charts that people want me to look at. So maybe tonight, if there's specific pairs, just write them down right now. And those are the only pairs I'm going to look into tonight, because we've got only about 30 minutes left before war room is over. Now, check this out. On Monday, I sent out a signal and said, sell DXY, sell USD CAD. I put two charts together. I've done too many videos around this, just explaining the same thing. Because if my dollar index is falling, pairs are falling. But Wednesday, I said FOMC is talking, so be careful, right? So it's like on Monday, the signal is beautiful. We sell. If you're an intraday trader, you made your money. You made zero losses. I haven't even calculated the amount of pips we gained this week. But if you followed my signals, if your portfolio is like mine, because every trade that I give you guys, I take. I had no losses this week. When I told you guys to get out, I got out. When I told you guys to get in, I got in. When I said it's a risky trade, I took the risky trade and I said, don't take the risky trade. All my risky trades worked. Pound JPY sold, USD buy, short-term buy, 30-something pips went up. USD CAD risky buy went up, and then we closed. USD swing trade sell is still happening, right? So it was a beautiful week. But look at this. On Monday, price hit a supply and dropped. Monday, Tuesday. Wednesday, FOMC comes. Well, what's going on here? Where's price right now? Where is it coming from? Where is it going? Right. FOMC says something like I kept saying, it's going to be risk off. It's going to be risk off. I literally kept warning you guys Monday, Tuesday, Wednesday, it's going to be risk off. It's going to be risk off. Dollar's going to be strong. Dollar's going to be strong. Because you can track the tone, right? So markets are pushed up. Now, interesting. Markets get pushed up. Retail traders, unfortunately, or fundamental analysis and the gurus out there who don't really understand a lot of the stuff, think it's now time to hold buys forever. If price gets to an area of value like this, a supply, you see where half the line is for the order block, and markets don't remove it, you do what smart money is going to do. FOMC was starting to create the pressure, the sentiment of how markets are going to price in everything, right? Price is everything, but they're also going to start pricing in everything. So they're literally saying, this is the day where they decide to be hawkish. Look at this, 16 June, the last time they were very hawkish, FOMC meeting. But on this particular meeting, there was a decision as well. There was an interest rate hike. So on the 4th of November, expect charts to look like this. If FOMC tampers, if it gets up, and I won't be teaching on the 4th of November, maybe we'll still be in the course, I don't know. But if we're not in class, or I might cancel that class that night just to catch this trade properly, right? Or maybe we do it live together, we'll see. But this is going to be a big bullish push. Because if FOMC says we're doing it right now, just so we know it's 8 p.m. and we're about to explain to you that as the federal chair, we've seen that, United States is actually in a dangerous sense with inflation. Inflation might not be transitory as we thought. Judging with the previous NFP report, we saw very good job numbers. Our economy is robust and is growing. Our CPI index has also given us a good report. If you saw the ADP before the NFP, the three reports I always speak about in this channel, he's going to say something dumb like that. He's going to say, oh, we're all green to go. Boom, tempering started. This thing is just going to explode. Boof, it's going to explode. Demand, and this is the rally you can expect. You can expect another impulse explosion like this, right? In the meantime, between today and the 4th of November, what has markets done so far? Markets have made sure that the supply in red is now suffering from glass effect. What does that mean? Well, it means that now we know for a fact that even if the dollar goes down, the next time it's coming up, this won't be a problem. The 4th of November is about 2 to 3 weeks from now. So there's still a lot of time. But in the meantime, they've started removing areas of value. Let's go to the H4 time frame just to show you something. I'm teaching tonight, but maybe it will help you because there will be times where Leroy is not there. This is the FOMC candle at about, this is the 4-hour chart. So on the 1-hour chart, this literally happened at 8 p.m. They'll be like, then it's making stuff up. It's making stuff up. There, look down. You see there? 22 September, 8 p.m. You see that there? That big green candle? See that there? It's written there. Big push up, 8 p.m. That's when the FOMC was talking. So, but I want to show you something on the 4-hour, and then we'll come back to the 1 hour. Markets went up here. But the banks are not stupid. They're not gonna just start phoning people at like FOMC is talking, kill sales. The sell orders here need to be profitable. When I work for Alan Gray as a floor trader, I keep telling you guys, or I've told people I've taught, right? So I've worked on the floor just to see both ends of the markets. As a floor trader, floor traders, Alan Gray, Old Mutual, Salem, whatever bank you're working as a floor trader, you don't get paid for pips. You don't get paid for being right in the market. I never got paid for being a genius in the market. That was not the job. The job is to execute orders. Call your client, the big client, they give you money, they want to buy, they want to sell USD at 93.58. You get a bunch of clients, you convince them that Standard Bank wants to sell there, FNP wants to sell there, do you want to sell there? Let's sell. I get orders, and then boom, the whole day I'm executing orders. That's the job of an order trade or flow trader, right? There are some flow traders who are executing trades for the company, but I'm saying on my end, what I had to do was to actually be pushing orders up. That was a job for me, right? I literally had to get paid for that, not for being right or wrong in the market. Being wrong or right didn't affect my salary, right? That's a financial person's job. Now, if there are order flows, that's why we like tracking supply and demand and order blocks and order flows. If there are sell orders here, they have to be profitable. No bank is gonna go, it's okay, Leroy, we left 50 million rands in that area of value. Don't worry about it. Let's just buy now because the dollar is buying. No one's gonna leave money. It's capital that must become an investment vehicle, because those guys have to report to bigger guys who want to know where's their money, right? Essentially. So FOMC speaks and people get a bullish signal, which technically it's bullish, but it's bullish because this will be priced in. We can see it coming. Not now. Now you've got a supply in the way. So what do they do? They literally use the FOMC to drive price back into the demand. What are retail traders taught to do? They're taught to wait for confirmation. There's a big green candle, confirmation. Anyone who's going up here, they immediately sold against them the whole day. The next day in the London session, it was brutal. The entire London session sold back the entire FOMC candle. Now, this is a support. It's not a demand. Price simply created a support. What did the US markets do when the following day? No, the Asian markets, sorry. The next day, on Thursday or something like that, the Asian markets literally use the support to spike the supply. So now my supply has got 1, 2, 3. You see, starting to get the picture. And then literally the next day, which is Friday, how markets closed, price acted like nothing was going on. There's something called market efficiencies, by the way. We'll talk about these in module 3, right? These type of weeks, generally speaking, need to get filled, right? Normally, You have to feel it. Like so this makes sense. So even though anyone was buying here was spiked out, any sellers were spiked out, etc. Price went up, then dropped back down, and then all of a sudden markets are starting to refill their efficiencies. And now we have a situation where price is here. Now, if I would ask you again the same questions I've asked you before, where is price now on the dollar index? Because now we need to understand what we're doing this week. On the dollar index, after explaining all that stuff, it doesn't matter because at the end of the day, FOMC was green. The next day, London session gave us a bloody red. And on Friday, markets went up to retest the bearish engulfing pattern. What is price doing? Has anything changed? For me, not yet. For me, I can see that because the dollar wants to be strong on the 4th of November, I'm trying to think like the banks, right? The dollar wants to be strong on the 4th of November, according to the FOMC. It makes sense that between now and then, we most likely want to push the dollar a little bit down. All right. The only thing that's going to change this thing now is the Evergrande crisis. The Evergrande crisis, the one I started off with, which I said is going to affect us this week. Right? It's not that we are wrong. It's just that if that crisis gets bad and investors pull out, they're going to put money in safe havens. The dollar is a safe haven, which means if enough money comes in, boom, this thing goes up. But for now, my money is coming back here. I would like to see this happen, right? I'd like to see price at least come back here because, again, they did create this area of value to take out that area of value. Therefore, there's a lot of money. When a bank takes out a supply or a demand using a supply or demand, the bank is committed to that area of value that took out an opposing area of value. To say that this demand took out a supply, this demand is strong. That's what I'm saying. So I'd like to see markets use this. I don't think this will be used on the 4th of November. That's way too far, right? I'd like to see markets use this, maybe come back up, maybe go back down, then we go back up again. It's about 3 weeks that we have to wait for that main event, right? NFP is not even on the first this coming Friday. It's the second Friday of October. So there's quite a lot of waiting to do. So I'm still dollar bearish for the most part, but within reason. For me, this is like a bearish engulfing pattern. And until proven otherwise, this red order block that's now suffering from glass effect, 50% of the orders are still intact, right? So I'm also aware of that. So until then, I'm not changing the plan. But I'm getting mixed messages in the market. So let me show you what I mean. So I want this to drop dollar. So if this is going to drop, if the dollar index is going to drop, that basically always means a couple of things. It means my risk sensitive assets, not all assets. So it doesn't account for all USD pairs. For example, USDPLN, the one that we just did right now, that could still keep going up. Those exotic pairs, those things are running on their own lifeline because of how weak the opposing thing. Things like this, USDs are. That could still go up if it wants to go up, right? It could be better meant to go down. But I'm talking about things that are more in line with the DXY index, like USD CAD. So if my DXY is falling, which I think it is, even stuff like USD CAD might also fall, essentially. You need to find the pairs that run the most with the DXY. But for my risk-sensitive assets, what's a risk-sensitive asset? Stuff like pound, very risk-sensitive. Euro, anything that fell in 2008, a lot, right, is quite risk-sensitive, right? So pound, euro, etc. If my dollar is falling, it means stuff like this: pound, USD, euro, USD, etc., will want to buy. That those things will go up. So that's kind of like how the correlation, makes sense, works out. But again, you are so much better going back to my public lectures. I've got a lot of free public lectures on Facebook that I haven't still moved to our YouTube channel. I'll move them all this week. So if you want to wait for that, that's not a problem. But I'm not going to edit them. I'm not going to make them look nice. Whatever camera I was using 2 years ago when I did the public lectures, that's the view. Forget about the quality of the video. Just listen to what I'm saying. It's very important. But in one of my public lectures, there's a public lecture called Market Correlations. And you can actually come test this stuff here. Right, so this is my FX book. It's a popular app. You should have it, or you can use it on the internet. And all you want to know is correlation. Like you want to see what pairs correlate the most. If I'm in a Euro USD trade, See that there, I've just clicked on Euro USD. I want to know what's got 100% correlation, which is obviously Euro USD. And then what's the next highest correlation, right? So sometimes I like to double click on this thing because, oh wait, where do I go? I come here. I'm just going to quickly find Euro USD and then we'll get back to it. I just want to show you something as quickly as possible. It's obviously at the top. I just left it right. Wait. There it is. So I'm going to try and open Euro USD here. So I just click on it. That's all. My FX book is a beautiful free website. And it's going to give me a list. Look at this list. Top absolute correlation. This means, right, when Euro USD is moving up, USD SEC is going to move down, right? There's a negative correlation. Like so let's, maybe this is going to confuse you. Let's start with positive. So positive means if this is going up, if Euro USD is going up, AUD USD has a 70 to 79 to almost 80% chance of also going up, right? And I like to pick the highest. So you will never find me doing a correlation like Euro USD and also AUDJPY. 64% is high, but not high enough, right? I like keeping here. In fact, in the academy, we have a weird rule where we only take 3 or 2 pairs that match us at about 90, 80%, I think was our cutoff, or 85%. But I'm guaranteed that these two will move the same. So when I trade NFP, if you've seen my live trades, you'll notice that if I'm trading NFP, I've got pound USD, Euro USD, AUD USD open. Those are my 3 main trades. And that's all I need for that volatility spike, because I know if I get one of them right, I get all of them right. Essentially, basic stuff. The risk is the same. If you get one wrong, you get all of them wrong, right? So be careful of that, right? Top negative correlation, so that I am almost hedged in my account. If I'm buying here, Euro USD, I'll probably start selling USD Swedish krona, like negative correlations. It's simple. So I like showing people this as a roadmap, right, to how you can kind of like generate more trade ideas. But for the most part, keep it that simple. So if our dollar index is falling, we're going to see our risky assets go back up a little bit, which goes to trade idea number 1, which is pound USD. Trade idea number 1, which is pound USD. Man, it's going to take me forever to summarize what we spoke about tonight, because I feel like we're all over the place, but I really hope. All right, cool. Which moves first between DXY? DXY, buddy. DXY. Yeah. So what happened was DXY just made slight contact, and then USD CAD just felt the pressure. So for me, that's why I love DXY. I'm just answering Mr. Sia's question there. So DXY would be your go-to because it's the index, right? It's the basket of the dollar. It's gonna show you the dollar strength, right? So let's go to pound USD. So remember, I'm seeing some type of potential drop in the DXY. So if I'm seeing a drop in the DXY, pound USD must go up because the dollar is going to be weak. So pound, the risky assets, Euro USD must go up. AUD USD must go up. And this is, I hope you guys can see it. Let me remove the monthly. All right, so much to do, right? So let's start on a clean chart, and then we'll come back to my notes here, right? So this is a pound USD, right? GBPUSD. GBPUSD, as we've spoken about many times, 10 times, 14 times, 50 times, is inside a supply. We cannot deny the supply. The supply is the supply is the supply. Euro USD got to a supply identical first. Euro USD left the supply identical to this supply first. Euro USD then found a demand close by identical to this and went back to the supply and is now falling. Euro USD has set the tone for risk assets. It's the primary market when you're looking for a mirror, when you want to see what is made in the image of risky assets, look at this pattern. I've done this before in war rooms. I don't know why I'm wasting time, but in case you're new, right? I never know who's in, who's out. Guys, please don't forget to like this. By the way, if you're still watching, I'm assuming I'm not entirely annoying and it's helping you. So please help the channel by hitting that like. Please help the channel right now if you can. So it's just so you don't forget, if you're new, please subscribe. Oh, so many notes on every single chart on Euro USD. You can tell I'm back to teaching. Right, that's fantastic. There we go. So you see this? I spoke about this either in class or in a war room. But look at this chart. It looks exactly like pound USD. Please don't forget to like this. It really helps the algorithm. Right, there we go. So markets arrived at an identical supply. and then dropped. Pound USD is only starting to drop right now, right? Literally only starting that journey right now. So we kind of like got a GPS, right? It was telling us, look, man, we've been there, done that, right? And then what Euro USD did was it pivoted on this demand, which we all know there's a long-term 2008 crisis trend line, right? The trend line, the downtrend from 2008 that separates, the bearish structure, and there's a demand right there, etc., right? It's just that I don't want to, there's no time to break everything down, but it's there. There's a demand there. Markets hit the demand, price went back up. The markets are now leaving the supply. As they're leaving a supply that they've dinged twice, what did Euro USD do? Okay, cool. Pressure upon pressure, right? Pressure upon pressure. So what someone, so it's been I think 10 days or two, almost a week and above, we have already told you guys, for my professional account, so for all my clients' accounts, we don't trade for individuals. I must always make that disclaimer. I don't want your money. Please don't. No one. If you see anyone saying 365 account management, anything scammy, tell me. I literally, my favorite thing to do last year was to sue people who are abusing our name. We do not trade for individuals. We really don't. We do trade for companies, but there's a long-term criteria, and I'm very picky on who I want to work with. For individuals, this is it. I give you everything inside my mind in a structured way, in a course, in war rooms, in public free forums, as much as I can, so you can do it yourself, right? So you can be in charge of your own wealth, right? So look at this. Price is leaving. I am not buying anything on my corporate account, Euro USD. Never. I'm holding my sales now, right? The buys we took in the war room group is because most of you guys, I know you're short-term traders. So you just want profits today, pips. So I can buy and sell with you. But for a professional swing, I'm here. I'm literally watching down for this. And if that's the case, then my mindset is very much similar for pound USD. It will take, Jesus, Mary, Joseph, and Goliath, all of them, to convince me otherwise. And that's possible in the markets. If price decides to shift in the markets, we are going to listen to whatever the markets are saying. But right now, we are selling. Big picture, the banks are selling. Let me just say it this way. The banks are selling, and price is slowly but surely starting to leave a supply, right? There's still not enough. We need a full break of market structure. So this will be it here. I'd love to see price cross over this white line. When price crosses over this white line, I don't care what other candles will show up. Green, blue, it doesn't matter, right? It doesn't matter if it wants to go back up. Now I know we're definitely going down, right? But I need that to happen first. But for the most part, I'm waiting for it. So I've got this governing supply. If I go to my weekly time frame, which is where you see this BOS is sitting at a very strong demand that held price sometime in July, and then markets came back, held price again in August, right? So we're done now. We're happy with the performance of this 365 candle. It needs to drop, right? And price needs to weaken this area. But now, if you're not in the sale, for a swing trader, it's very difficult. Swing traders have 1 or 2 perfect entries, right? Because we hold for so long, sometimes we have to hold during retracements. And the wrong retracement can kick you out. So imagine holding a trade for 3 weeks just to break even. So swing traders have to be extremely methodological. A lot of people think it's intraday traders that must watch their levels. Now, it's actually swing because you only have one interest. There was only one USD CAD interest, the one I gave you guys. If you missed that sell, literally, you got kicked off when I was buying, right? Because that was the retracement entry now. Right, so be very, very careful with your multiple time frame analysis, right? So this is where price is now on the weekly. I can't see a clean level where price can come back to. That's why I'm convinced price is going to drop. And here we are on the daily chart. So now I said my dollar index is falling. My dollar is weak. If my dollar index is falling and my dollar is weak, then what's going to happen? Well, this makes sense. Got a bullish engulfing pattern on the daily time frame. And on my dollar index, we have a bearish engulfing pattern. So while my DXY is going down, my pound USD is going up, right? You guys get the correlation. Someone, please, I want to come out as clear as day. So I'm just going to plot in here the DXY chart for you. And then go to the daily time frame. Every time I do it this way, this chart with so many notes comes out, and I'm like, where were you? Let's remove all these Fibonacci's. Right, there we go. You see this on the daily time frame? This here is DXY, US dollar currency index, bearish engulfing pattern, green candle, testing it. On your whatever, left or right, pound USD, bullish engulfing pattern, red candle, testing it, right? So from a technical perspective, textbook trader, without Evergrande crisis, without the markets going wild, this is the trade for the week, right? Simple. Drop here, go to AvaTrade, sell DXY, buy pound USD everywhere else. Simple, 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 simple. That's the trade of the week, right? You got your double bottom, triple bottom, all the bottoms. But I am also, however, why I won't be in the buy with you. Those of you who are going to take the buy, you might make money. I'm not in the buy. I'm not in the buy because I am at a place where I've mastered risk to reward ratio, and now I monitor reputation. So I haven't had a loss in a very long time in the market, and I want to stick to that. Right? I like saying stuff like that just for the sake of 365. Right? It's something that you should never be concerned about. If you're starting to trade, win rate is the least important thing in the world. Risk to reward ratio is the most important thing. You can win all your trades and still see tiny percent growth if you're taking stupid trades, stupid $10, $4 here, because when you take a loss, you lose $50. That's dumb trading, right? Someone who shows me 80 wins, but they were winning peanuts, and every time they lose once or three times, they lose a bigger chunk. That's dumb trading, right? But I'm saying, because I'm running a public Telegram group and I'm trying to educate as many people as possible on the superiority of supply and demand, I am worried about win rate as well, which makes me more picky about trades I take. So for example, here, I've drawn a couple of structures. I'm starting to see what we call higher lows on the chart there. See that there? Higher lows. That means price is going down. Now remember, this entire yellow block that we drew is our monthly supply. So it makes sense, right? It makes sense that inside our monthly supply, we would start to see the creation of a long-term downtrend, right? As a supply and demand trader, that's what you're obsessed about. You want to know the plan. What is the bank doing? When I know what the banks are doing, I do it with them. So now I know that I'm starting to see higher lows. I can see that these lows, this 20 April lows have been broken. Markets are now also created here a lower high. I like that. And then I hate the fact that markets then are stuck here, because the next one better end there. So there must be a new lower high here. That's what I want to see. So I'm not saying the buy isn't going to work. I'm saying the buy might work. It should work. All things being perfect in the markets, apart from the fact that Evergrande might shake things up, right? But I'm not going to take it. I'm not desperate for trades right now. I love my capital. So I'm not going to take a risky trade like this, because I can tell that this is going on. The second thing I did then was to call anti-fib. Anti-fib is my best friend. She tells me when the retracements are going to end. When I pull out my anti-fib, swing high, swing low, for a bearish Fibonacci, not a bullish Fibonacci, a bearish Fibonacci from this highest point here all the way to the turn, I can see that there is a golden ratio here. You can see that. Right, so now logic is simple, guys. If I want to sell there, which is clearly what I want to do, right, for price to get all the way up there, there's somebody who has to push it up. Buyers have to be willing to push price up, which again means you can buy this thing Monday, Tuesday, but Wednesday, Thursday, we might start selling, right? It's a possibility. And it's just based on where you want to be. I like trading alongside the banks, because again, as much as I want to wait for this golden ratio area, what if markets buy up to here and then stop, right? My sell won't get triggered, but I might be in the toilet when price starts to turn, right? I might be taking a poop, and then price stops here at the 50% mark, and I'm holding a buy. And before you know it, after I take a shower, go to Facebook and laugh at people, come back, blah, 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 my account is blown or my stop loss has been hit because the buy didn't have enough power, because that buy structurally makes sense, but fundamentally the governor isn't interested in it. The buy might get some institutional blessing only because they want to sell against all these buyers, right? So for me, such a trade carries a little bit of of too much uncertainty and risk, but I do think there's a 70% chance that markets will buy. And that comes from my dollar. If my dollar index falls, then you can definitely buy, right? So if that dollar index falls, you can definitely buy. Now, let's look at this chart now where my notes are, so I can really break down what I saw. On the daily time frame, we've got a couple of things going for us. It's the exact same thing, only now there's just too many notes. So let's remove these info lines so you don't get confused. Number one, what did I delete now? All right, and then I'm going to remove the yellow from the monthly chart so that the yellow from that governing supply, right? For now we don't need it because we already know we're inside it. Then I'm going to leave it. So this is what we have going on. So you could take a buy here. Problem number two about taking the buy, and this is what I'm trying to say. As a new trader, your job is to be assessed about risk to reward ratio. If I risk $1 in the markets, how much will I make out of that trade? If I'm not going to make $3, if I'm not risking 1:3, it's okay to watch the markets move in your direction and go, you know what, I was right, I knew what I was doing. Then risk money unnecessarily. The buy offers you 2:1. It's a 50% type of trade, right? It offers you 2. So you risk $1, you make 2 if you're right. All right, that's what the buy offers you, because you cannot foresee buying going beyond the golden fib area, and there will be some type of reaction there. Your buy might be so strong and it will break it, but you don't know that. I don't know that. Number one. Number two, if you're a smart buyer, that's the only place you can put your take profits is here, and that's a 2:1 from where price is today. Right, or from where price should start buying. So let's really make sure we draw this correctly. Your stop loss, you can't cheat your stop loss. Your stop loss is to be outside your area of value, right? So there, this is the distance, right? This is literally your buy. There, I knew something was wrong. I've literally drawn it correctly to the white line, right? So it's actually 1:1.5. You're risking $1 to make $1.50 multiplied by your lot size, your leverage, and your pip count. But the reality is this is a 1:1 trade, the buy. That's why I won't be in it with you, because as much as I can read supply and demand, I'm bound to rules. Trading for me has become like marital vows, right? Till death do us part, I will follow market rules. I know I will always average out on top. I can lose. I mean, back in the day, my portfolio would have 40 losses. 40, because I used to trade every day like a mad person, right? You know, when you're getting excited about trading, you think you must trade every day. But when I look at it after 2 months, 3 months, my graph was going up. I was taking a lot of trades, but I was trying to be as rule-based as I could. So I'll take this 1:1. As long as the supply and demand admit the rules, I'll take it. And maybe I would lose, maybe I'd make a lot of money. But overall, the traders who make it overall are not traders who lose less, are traders who have a probability scale, where your graph gets dips and dabs like crypto, but it keeps going up. And one of the things to quicken that pace is to learn to not take trades like this. Now, on the H4 time frame, you can better your R&R, all right? On the H4 time frame, you see this buy, it's too early on the smaller time frames, because to me, this is like a PCP to the downside. So on the H4 time frame, if I was to take a buy, if I come back on Tuesday and say, guys, I'm bored, I'm going to take a risky trade, buying pound USD, take it if you want to, but it's not a war room signal. It's because I would have done this. I would have waited to buy all the way down here. Now look at how my R&I has changed. This is what we call multiple time frames. This is why multiple time frames analysis is important. Number one, for the portfolio, I am risking far less because I've moved from daily to H4. I'm risking far less pips or exposure. Number two, I acknowledge that on the H4 time frame, this is a PCP. Price should continue down, which is interesting because on the dollar, we wanted to see price come down. But it seems like before this thing can go up, the Asian session starting at midnight tonight might push price down. So it means the London session at 9 a.m. tomorrow might be looking to buy. All right, fine. So if I wake up on time, which I always do, I might start to think about, all right, maybe I had a very good trading week, right? People, when you want to grow a small account, you take some crazy risks sometimes. I had a good trading week. I didn't take a loss. So can I risk 5% of just the profits? So let's say, man, I'm teaching tonight. This is one of my all-time favorite war rooms, but might not be yours because you didn't get a lot of market signals. But I want you to get the game. Let's say you had a $200 US account and you took all the trades this week, and now you've got a $300 US account. I don't know, but you don't approach the market with that mentality, right? You approach the market is you've got a $100 US account. Do you understand what I'm saying? Why? 200 was your previous capital from all the battles you fought with the markets in the last however long you've been trading. In 1 week, you grew your account to $100. Maybe you grew your account to $50. Maybe you added $20. Maybe you added $500. I don't know. My point is, I have a tendency after growing my capital or doubling my account just once to only start to risk profits gained and protect capital. Why? It's slow. Only true traders will stick for that process. The trader's process, number 2. But number 3, it keeps me in the game forever. You can't trade without money. You cannot trade without capital. If you keep taking trades that get you out of capital, you are going to have crazy psychology in the long run. So if I was you, and let's say I had $100 or $200, and now my account is 300, moving forward, I'm back to 0.01 of that $100, right? So you understand, I'm risking 5% of profits, not 5% of capital for risky trades like this. And I'm saying, okay, fine, let's say the buy works. I'm just gonna go 0.01 with it. Yeah, sure, it's light, it's stupid, it's little, blah, blah, blah. You can't become a millionaire overnight. It's gonna go to that supply. You're gonna get, I know you can't see it because you're on my whiteboard, but I'm gonna quickly check for you how many pips that is. Okay, it's 142 pips. You're gonna do this for your own account, right? Whatever your account size is. If you want, I'm not your financial advisor, even though I'm licensed, I'm not contracted to you. So you do what you want with your money. I'm just here to give some education and light. So look at this. Because remember, we've reduced our area of value. On the daily, it looks like this. We enter here. On the H4, I've reduced it now to there. So now I'm saying, I am risking in the markets. Wait, I don't want to mess up everything else, right? Now I'm saying I'm risking in the markets. Let's see. I'm risking 25 pips in the markets. You guys can see that, right? Let me just move it there. There we go. I'm risking 25 pips in the markets. But if I go up to the point where Leroy is going to start selling, where there's an H4 supply, I'm going to eat 142 pips. But I also accept the risk that this buy might not work. It might not work, right? Because of all the things I've told you about, but I still want to take the trade because that's it. People think for trading, you got to be present in the markets. Your account grows based on every single supply and demand trade you take that meets your rules. The ones that ping you out, you figure out, you fix it. If your stop loss too tight, did you miss the imbalance rule? But you won't know unless you're in the game, taking every single supply and demand trade, right? What you care about is not did you lose or win in the markets on Monday. You care about how many trades did you take in the month of September and how many did you win or lose and what's your capital. You care about trading in clusters. I'm teaching too much, but anyway, look at this. So 142. So I like this. Here's another link. I'm just going to drop it now in the chat there, right? It's a simple way. If you don't know how to calculate pips, if you're confused, if it's annoying to do it in your maths, annoying, just come there. Just bookmark that link that I've just sent to you. Literally just bookmark that link that I've just sent to you right now. And you simply come, it's just a simple pip calculator. So you say, look, man, how many are we looking at? I want to make, I'm going to gain 142 pips if I hold this buy. But I don't want to risk my capital because, again, I'm not entirely happy with the trade idea, but it's a risky trade. All my risky trades this week worked, so this might work. So 142 pips. But unfortunately, I'm going to go 0.01. It's $14. If you've got a $100 account, if you've got a $200 account, or your profits this week were $200, you risk 5% of your profits. If you're $300, except each to his own. I don't know what your account size is, but remember, you are also risking 25 pips of your capital. So now at 0.01, and I want this mess to make sense, you are using $2 of your profits to make $14. Remember, it's going to go up to 142 pips. Am I making sense? It sounds like small money, but the percentage gain is wild. Because if you can risk $2 in 10 charts to make 15, let's call it $15 in 10 charts. After $2, you've risked $20 to make $150. A trader like that, for me, has a long-term lifeline in this game. A trader like that, I can hire. A trader who will come to me and say, look, man, I didn't have a lot of capital, but every time I risk $2, I made 15. That's wild. Because one day you're going to get over big lots, and you're going to get over thinking it's cool to trade news events with 100 lot size, and you're going to mature. And when you mature, we can trust you with money. And when we trust you with money and you get big capital, you're going to be starting to say things like this: I risked $1,000 to make 12,000. And that's when the whole game starts to change. But this is it. So for a risky trade or for a buy, I would wait for a buy down there, a risky buy. A buy where if I am losing money, I am only losing $2. If I have $100 count or $200 count or whatever, right? I wouldn't just rush to buy the market on Monday, right? I'd wait for this because there's a high chance that this buy could fail, right? But for me as a signal, and I do apologize, greeting, doctor. Hey, what's up, man? What's up? Good to see you. Right, but for me, again, you know, personally speaking, this is not the trade for me. I won't be rushing to buy. All right, I won't be rushing to buy because already the bullish engulfing pattern on the daily is tested. Right, so to me, it's like a trap, right? I was like, are you seriously going to explode from here and go up there? Because if you are, what on earth is going on the H4 time frame? Right, because again, on the H4 time frame, bullish engulfing, base drop. That's how it works, right? You get a base drop, rally, base, rally, base drop, base going up. It's unheard of. It could work. So one could make the argument, Leroy, the dollar index is falling, therefore risk assets should go up. So just put out a bullish fib. Oh, then it makes sense. You're like, oh yeah, definitely. Right. Markets could rally up there. I'm not denying that that's impossible. I know it all. I can see there's a golden ratio. There's market rejection, long wicks. But again, I'm not a fan of the trade because to buy up here, once again, you're no longer risking 25 pips. If you want the buy to hold, you need your stop loss outside this area of value. That's why I think the buy is dumb. It's got a possibility, but your stop loss is here. So now you're risking 60 pips. So look how the game changes now. Still on 0.01, you're risking $6, right, to make 14. It's not still bad. It's like almost 1:2. Takes us back to that 1:2. You want 1:3 as a minimum. So if I was risking $6 to make 18, I'll be on it, but I don't like it. Right, so for Pound USD, buying might continue, buying could work, and I'll be happy for every single buyer. But my first port of call is to try and sell here. Right, so I want to sell up here. Now, I'll sell in there based on the H4 time frame. Now, understand me correctly. And it's quite wide in terms of area of value. Is my internet dropping? What's going on? I'm hearing stuff going in the background. My pip count is quite wild. Sorry, right? So somewhere there, that's annoying. Sorry, guys. I think the derivatives broke or something. Something is open in the background. Let me just quickly close it. Let me just close all my live accounts. I was just doing a lot of analysis before we started. Right, so I want to sell here first. All right. Am I still live? What's going on? Have you guys lost me? I'm going to need someone to let me know. All right, I think I'm back. I think I'm back online. I don't know what's going on. Right, I'm just hoping you guys are still with me because I know there's a lag. So by the time you hear me saying if you lost me, I'll have moved on. But hopefully, not sure if you can look at CADJPY. Okay, I'll include that. And then that'll be our last chart for the night, CADJPY. Right, so I am trying to take this sell here. I like how markets left the level, number one. Number two, I love the accumulation, right? Okay, but look at this. There was a BOS here, a break of market structure. So price went down, then broke higher, right? That's why if I want to buy, and markets are telling me that the buyers showed up and the dollar is going to be weak, this buy is going to work for some people, but I would very much prefer buy down there first. I would very much prefer markets forget about the fib level and come all the way down here before we can go up. But this is very possible, right? BOS happened. Look at this. Markets broke through that area. That's what we mean. Strong push up and then turned, right? But the sell is a problem. I like the sell by itself, but I'm only going to risk, it's a C-class sell. Despite the area of value, or it's a C-class sell. And the reason for that, guys, is confluence is key. Confluence is key. So look at my sell. You see how my sell looks here on the daily time frame? That's the problem I have. It doesn't cover my daily order block. This is my daily order block. I'm going to give it a red boundary and make it thick. You see this here? That's the daily order block, right? Because I have to take the high, right? And I can't ignore a lot of stuff. Some people will do this, and I don't blame them. It makes a lot of sense. And probably I should also do the same, because that will increase my risk to reward ratio by a little bit if I do something like that, right? And that would make sense. But I just want to make sure I've got the entire playing field covered, just in case they break it and still drop. So this H4, I'm going to put a white boundary around the H4 order block we looked at, is not perfectly covered on the daily. Does that make sense? That's my worry about the sell. That's why I'm putting 1%. So on sell one, I'm putting 1% because I'm worried that when price comes here to react inside my H4, it could break my H4 supply, because again, the daily supply is this one. So price, I am inside a little bit inside the daily supply, but not covered as an H4 supply. Does that make sense? I'm going to go back to H4 again. H4 is the white boundary. I'm sorry, it's just messy, but you just have to try your best to see it. This is the H4 supply I'm talking about. But this entire red block is the daily supply. So if one was to do something like this, one would argue that's the true sell on the daily here. Price K has already come back for a fresh touch, and now we're just eating fresh touch vibes, right? This is a trend. So what if markets, whether they leave here up or leave down, what if markets want to go for a retest on that daily supply? Would it be this red zone, right? Now, if markets want to come up here, you can see I'm in trouble on the H4 supply. That's a risk I have to take. So what I do is I put two pending orders. I put less lot size nonsense here. And then on the daily, I have to also put a smaller lot size, because the area of value for the daily is big. That's option one. Option one is to sell both trades at the same time. So I'll have a bigger lot size. Let's be practical. Let's be very practical. Let's say you've got a small account. I'm not telling you what to do. I'm simply saying this is how I look at the markets. I take the risk. So I'm going to go H4 order block is I'll tell you now. I'm on. Thanks, David. Thank you, sir. There's something weird happened for a second, and then I don't know what happened. Right. So H4 order block is 60 pips. All right. It's 60 pips. I've just calculated for you, and I know all you can see is the whiteboard. The H4 order block that is the true sell in the daily is also 60 pips. So maybe you should see it for yourselves, so that it's not an imaginary thing. I know it's almost time up. It's time to go. I know this. Right, there you go. So H4 order block is here. It's 60 pips, but the true sell is there, 60 pips. So I've got two sales that I could do that to, 60 pips. So let's say I had $200 US in my account, or $100 US. And you would calculate for your own account. 60 pips, 60 pips. It means I can do this. Option one is to have two sales there. One 0.01 and the other one 0.01 if you've got $200 US account, covering both sale points individually, right? And it sucks if you have a small account, because not every signal is for every single account, right? But I have to give you the harsh reality. How I'm going to play it is I've got two options. I haven't decided yet. Option one is to take here. So maybe I go 0.20 or 30 or whatever I want from my account here as a small size here. Option 2 is to also sell at the same time, sell trade 2 here. But if I go 0.30 on this H4 block here, I'll go 0.15 on the second sell, and the stop loss is wider, so it covers the whole daily area. So I sacrifice lot sizing to swallow more room for price to breathe. All right. But in the event that price does not come all the way up here, I'm already triggered there. Now I'm a swing trader. The negative balance that you guys see as intraday traders, that your thing is negative for 4 hours, 3 hours, as a swing trader, that's nothing to me. I can hold markets in a negative balance for 3 to 4 days. The whole point of a stop loss is a logical note to myself that this is the amount of loss I willingly accept. If I accept it, I don't interfere. So that's why my risk management has to be on point. If I accept going and holding what would actually be 146 pips just to catch the sale. So now if markets come in here and trigger this H4 supply, and just delete all of this stuff because it's just going to confuse it. So if markets come in here and trigger the H4 supply, sell one H4 supply is good to go, right? The stop loss is going to stay there in case price drives deeper. That's why I need to be careful which lot size I use here. I'll go with a much smaller lot size for the portfolio here, right? Like I said, now if I go say 0.30, that's sell 1, then sell 2, which is the ultimate high, I could go 0.30 again. So I go 5% hit, 5% hit, but the drop will eventually happen in my head, right? Analysis. Option 2, I go 0.30 for my account size here, and then second sell is also triggered here, but I cover the whole daily so that my confluence looks like this now. So this is the daily supply, and now my H4 supply is protected by my daily supply, which gives me a better probability. Right, so this is what that chart looks like now. So you see now how the white order block, the white area of value, the H4 supply is inside the daily. And the reality is this is all I need to cover, to be honest with you. I'm just being dramatic. This is the reality. This is what I need to, so I'll do that. Pound USD, let's stop there. I keep talking in circles. I would literally just do it like that, okay, for a sell. But bearing in mind that there's a potential push for a bull run. Right. The other reason why I like this, you can see for yourself, is I wrote there's a bearish retracement, golden area retracement, which I've already shown to you guys. So yeah, let's see what happens. You know, I'm hoping for a short-term risky buy here, a big long-term sell. This sell, I don't let go as a swing trader. I'm not letting go of this sell. I'm hoping it's a sell. It's a sell for the money, because if you see there on the daily time frame, on the governing time frame, there's really nothing. If you can sell there, there's nothing. This is just a weekly. It's in red because there's no confluence with the monthly, right? Or it's in red because of this. That's the problem. But this is money. That's the real money in price. That's literally where the money is for sellers. If markets can give us that, that's beautiful. So I'm risking, once again, a couple of almost just less than 100 pips. But I'm hoping as a swing trader to sell through all of this nonsense, right? And some people are like, yeah, what if you don't have the discipline? If you don't have the discipline, you get up, you take profit, and then you buy another retracement, and you buy another, so you keep selling the retracements. There'll be so many. It's actually better like that, because then you're making money, you can see your account grow, right? You must remember, I'm not your target right now. The stuff that I've been through in the markets, you need to go through that process. So take profits. I encourage you, please take profits. If that first sell works, sell one here, H4 sell works, you take profits down here, right? You don't go past this point, because this is where the buyers were previously. You just take profits. Right, next chart, because I'm going to go very quick now, guys, because time is up, and I do apologize. And I do thank you, by the way, for sticking with me this long. I do thank you for sticking with me this long. And honestly to God, if this helped you, do let me know in the comment section, or just at least like the video. But who else was going to tell you about the Evergrande crisis and the upcoming, market storm, right? I feel like I had no choice but to spend the first hour talking about that stuff, right? So Euro AUD was one of the charts given. I'm not even gonna go with assets. We'll catch up during the week, Let me answer the charts that were given to me, and then we call it a night, right? So price is tripping, right? So we got a good supply going. This is my new favorite thing. Oh, let me show you something real quick. Sorry, because it's a teaching war room. So once you analyze an asset like we just did right now, well, we just did pound USD, right? We've drawn our order blocks. We've got a plan going. There's a risky buy, an expensive sell. We've got a plan going. Double check yourself. Let me show you how. 365 traders, because we're all waiting for Leroy to give us module 3, blah, 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 blah. Let me give you some tips now. Double check yourself. Come here, right? Volume-based candlesticks. Make sure that you are covered. You see why I kept saying I want to keep this thing long, because what this will do is it will cut the crap. So now you've got clean turns, supply and demand number 5, not major turning points, but turning points, supply and demand number 5. You've got clean turns, and now you can monitor your clean turns. This automatically tells me that my H4 sale might work, but I have a better chance at the daily, because the daily area is this one. I'm like, okay, I see. I can see the H4. It might work, but I have a better chance of the daily, number 1. Number 2, it also shows me that even though we're waiting for a risky buy all the way down here, it might not happen. Markets are actually going to start going up on Monday. Why? Market efficiencies. We might need to fill this week. We might need to fill this week. This is already the rejection. This is like what do they call it? A rejection candle, right? That shows you that sellers were rejected, buyers took over, markets are going back up. But going back up to where? If you just draw your turning points the way I've taught you in the course, then you're stuck with this. This is not really a sufficient place for markets to stop. It could be one because of the Fibonacci, right? That's fine. That's a good probability to take. But now, if our golden ratio starts here, colleagues, comrades, and then so many lines, man, I know. I don't want you to be confused. I know, right? This is just a fib line. Where's our golden ratio? This is our golden ratio. 0.68 up to date. That's our golden ratio, right? Agreed? I'm just giving you some life hacks here, guys. It'll help you, right? So if I want to take my H4 trade, which I still do, I might need to take the top of that H4 trade, right? Because I'm looking at this golden ratio here, and my H4 type of thing takes, let's go to H4 time frame. So this is it. So then as a trader, I'm like, okay. All right. Complicated 365 candles, as we've been taught in the course. What do? I start to adjust my area of value. See what I'm doing there? If I've got a small account, I have to be more specific than Leroy. The smaller the account, the less risk you can afford. Then I'm like, look, man, this is technically inside the daily, inside the golden ratio. It's a better place to wait. Then I'm like, what's going on in the H4? I can put my entry point there and hope for the best. If all you could do is take one trade, this is the one trade to take. If all you could do was to take one trade, but risk a bit more, reduce lot size and make it look like this. And then I'm like, but man, people are trying to buy this thing right now. On the H4, we already saw it looked problematic. That we say there's a PCP downwards. Now my Kini-Hashi candlesticks will show me the momentum of buyers and sellers. This don't look like selling momentum is over. Yes, we've got a BOS, we know that, but where is price most likely to turn? Yes, if we draw another Fibonacci, it's a good place to go up, right? But as anyone who's patient and kind, etc., this will be a good place to wait if you want to take the risk. After you've done all of this, have a look at it on the line graph. You can start to see your market turns. You see there, your fib. You just want to make sure you're double confirmed, right? So this is maybe too wide. So it goes back to that. And then from my Kini-Hashi, I want you to get a mental picture, right? This is what it looks like. And in average candlesticks, very, very nice average candlesticks. Then we switch back to what we know. Cleaner. This would be the trade. All right, and it takes time. So if I do this for every single asset, I ask my partner. They know weekend is not a weekend. I have 8 hours of going through every asset like this. So this to me is the waiting period, which again is very much similar to what we got to. But look how look how it holds the daily now, right? If my stop loss is there, I've got a good hedge here. I'm protected. Now it's just about markets playing fair, essentially, right? So let's move on. But I thought I'd show you that it's important. And then because of time, remember, you must check the index of every trade. So you can see I already did my homework. Pound USD, this is the index of the British pound index. I'm gonna come here, Kinashi, you're gonna see the exact same play. But now on this one, it's showing you that, look, man, there isn't an order block here on the daily time frame. There's a golden ratio area, depending on how you do it. But on the H4 time frame, there's also nothing. So this is why I keep saying that H4 is a probability sell, but it's slightly high risk, right? Price could come all the way up here because this is the pound index. It shows you how strong or how weak the pound is. And this is where the retest of that pattern is. It's all the way down there, right? So this could have happened now or might happen. First come down and then go up, right? I won't waste your time with that anymore. So the next chart people want us to look at is AUD, Euro AUD. Let's go to Rwanda. See as like keep the hacks coming. Hey man, people are gonna tell me my videos are too long. They're gonna tell me my videos are too long, man. Right, so there we go. Euro AUD. Is it a supply? All right, we can see it's a supply, 365 candle, beautiful imbalance, hit a supply. All right, and then markets kind of like reacted, and then the month of September, this price was kind of like driving upwards. So it is a bearish engulfing pattern, it's a bearish flag, whatever you see, whatever you've been taught to see. At the end of the day, it's a place where selling exceeds buying, right? So weekly, not good. So after I see a strong governor move on the governing time frame, I want it to be followed by a strong move on the weekly time frame. And whenever that doesn't happen, so look at this, price arrived, drop, now it's coming back. I have to ask myself, why is it coming back? I have to figure out why. Well, if you look carefully, the weekly supply is still pregnant with sell orders, right? So the true sell is here. And if this is the true sell, right, markets haven't arrived. Let's draw an area of competition. You have to use the wick of the reasonable body. For me, that green candle is a reasonable body, right? So there's still a possibility for price to actually push up, right? So if you noticed, at some point we were buying. I mean, I'm not in this trade anymore, but it was a good buy. Euro AUD was a very good buy, right? So and if you also notice here, you know, as much as it made contact with the governor, right, it also broke its own supply on the weekly time frame at least, right? So all these things we pay attention to because they're telling us something. So we know that, generally speaking, we should see sell side, but we are not yet at the specific right sell side, right? I would wait for price to push up. If you want to take the trade, then you're looking for some upside. And it's a risky upside because price, technically speaking, has made contact with the governor. But now, if we're looking for a true sell, there's about 400 pips going up, right? Let's put it here. About 350 pips still to go that we might get. The daily is our friend. The daily is telling us, yes, all that money is yours, right? If wishes were horses, beggars would ride. My old man used to say that. But on the daily time frame, when we calculate our ability to really narrow things down now we're trying to find the true area of value, and I can see my monthly needs a bit to be tightened like that, something like that, right? We get this situation here. So there we go. Not the best supply on the daily time frame, number one. So because of that, it's not the strongest. We know not to trust it the most, right? So we've got, you know, an imbalance, but not the best. It's not the consecutive imbalance that we talk about in the course. Markets bought back for a fresh touch. They were in a rush to use it. They were in a rush to weaken it, and markets sold. Fantastic. So yeah, we could take a retest there, and price could go up there. Now, where is price right now in relation to all of that information? Price right now is dancing at this area here. So this is the area of competition for the weekly supply. Don't forget that. Remember, the weekly supply is that green candlestick with the longest day. See this there? This is our area of competition for the weekly supply. This is the daily supply, and now this is the weekly supply. So I can tighten my zones right now. Right. Now, if I tighten my zones, I know I'm in a governing supply, but I've not made contact with the weekly supply. I've not made contact with the weekly supply. I haven't even made contact with the true daily supply. Right. So again, upside, still upside, right? Upside with caution, because my governor is starting to warm up. Let's draw a horizontal ray against this consolidation and drop here. What happened? What does this mean? They broke it. If they broke it, what are they saying? They're saying, look, you can't stop us now, Johnson, or see us, whatever it is. The point is prices to go up a bit more. So that makes sense. So our thesis to keep holding some type of buy momentum here, is intriguing, because markets seem to be rewarding us for that right now. Right now on the daily time frame, moving to the left, because there's no point in enjoying the supply. It's broken. When they broke it, they did this though. They created a bearish engulfing pattern. So whatever buys you want to take this week, be very careful, right? Because all of a sudden you just have just under 200 pips to chow, which is good money, But do we have an entry? It's one thing to speculate how much you're going to make in the markets, but do we have an entry? Price will go, price reacting to a good demand, the market's moving, price dropping, markets drop to what? Drop to a bullish engulfing pattern, beautiful order block, standing firm, markets hit. So on Friday, we should have entered Thursday, Friday. That's what I'm seeing. I'm seeing if you wanted to make money, the safest time to do that was on Friday. We should have been in the money on Friday. Now, H4 time frame, what we're looking for here. This is where things get interesting. Problem number one, which is good, by the way, for anyone who's in a buy right now, right? Problem number two on the H4 time frame is that this is a daily confirmation, but then there was something here that was not really used. So I could draw it like that, maybe. Right? But it was. Then let's not lie to ourselves. I'm lying to you, actually. It was. Because then my area of competition would just be below. I'll definitely say that was a fresh touch there. Right. So this is it. It's now for chance makers. Chance makers are people who get in before imbalance rules are met. So one could make the argument that Leroy would now have a PCP formation, a bullish PCP, right over there. And I'll be like, yes, I see it. I don't like it, but I see it. Number one, I would ask maybe for you to wait for this. All right, but it might never happen, because what might happen is this instead. So instead of that, markets might just do something as simple as this. Just go up. And that's I mean, you can keep digging and digging and digging and digging. This is what it looks like on the 1 hour time frame. On the 1 hour time frame, if I can just do this, remember the line graph, guys, will never show you wicks. The line graph will always calculate the close and the open body of the candlestick, not the wicks. It won't show you the wicks. So the last time the markets gave traders a fake out was here. And you want to see how big that fake out is to determine whether what you have here is a fake out or not a fake out. But the last time markets acted like they were going up but didn't go up was right there. So we go back to our candlestick, right? On the 1 hour time frame, it was a whole situation, a bear trap. What's a bear trap? It's when they give you a very strong bullish sign, bullish engulfing candle to fake you out. So you come here, you buy. Leroy said, you get a bullish engulfing candle, you must just buy because it's retesting, blah, 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 blah. Notwithstanding the fact that that launched you into a supply, right? Don't fall for this stuff. You know better. It launched into a supply. Where's price coming from? It's now coming from a supply. Where is it going? It's going to find a demand. Does smart money buy like this? No. Buy low. They buy low. There we go. Markets went all the way low to a reasonable demand and then went back up, right? So this was a beautiful trap. Now, it doesn't look like they did the same here. So look at this. This bullish engulfing is in the inside of a bearish, remember the trend line looks weird now because like I said, the line graph cuts out wicks. And I like to see that. I like to see exactly what they're looking at, right? But I'll draw my trend line a bit better if I was using candlesticks. But now I'm looking at this trap. The bullish engulfing patterns on the inside of the bearish structure. Then they do it again. They do the same thing again. So it's like, fool me once, shame on you. Fool me twice, shame on me, maybe. Right, so they do it again here. Bullish engulfing pattern. But this one pierces out, okay? That's always a good sign, right? Let's draw it properly there with the body. Area of completion is too thick. Number one. Number two, as soon as the retest happened, it didn't, right? Markets just broke the order block. With this one, price actually accepted it, tested and went up. Number three, there was consolidation outside this trend line. So someone is thinking about doing something, and that something could be dropping price or pushing price up. For me, it's hard to tell, right? For me to make this decision, it's honestly one of those cases where I just want it simple. I want an order block. So that's why for me, I wouldn't bother buying there, right? And the buy could happen and Lira could be wrong, but for me, I wouldn't bother buying there at all because there's just no real substantial area to hold price, right? For me, this is it. I would wait for this to happen. And I would hope it happens before markets come to the supply, which is better. Logically, it's a better. You see that bullish engulfing pattern, the trap that people are buying is those sellers. Remember always when I teach you guys all talk about smart money, dumb money. Dumb money runs into supplies, runs with their money. Buy. And smart money is like, thank you very much, and they sell. So I wouldn't waste time. I would wait here. That's what I would do. Euro AUD, for me, I'd rather wait there than trade it, personally speaking. The 1 hour time frame, let's go to the H4. Yeah, makes sense to me on the H4 time frame because right now on the like so that's better. Imbalance rule has already been met. All right, I'm loving that. Okay, awesome. And then if I start to draw my trend line from point 1 to point 2, wick to wick, you'll notice that you've barely scratched the surface, right? So price could still come down. That's the point of drawing trend lines correctly. You draw them with the line graph to see activity, right? But when you draw them from wick to wick, you can see markets could still come down. Come down to where? Come down to what? Well, come down to buy, right? Before they can go back up. And then you put back your order block candlesticks to see the whole story. And this is what you got, what we spoke about. So this would be like supply and demand number 5, a simple based turning point, which I would wait for. So I would wait for this, even though there's a PCP here, and I completely understand that. Anything could happen, right? Markets could go a little bit up to there, convince a lot of people that it's fine, and then still come back down, right? So that's Euro AUD, all the best. I'm waiting for that low place. If I take that trade, I'll only take it there. NZDJPY, I'm gonna rush through these things, guys. I'm gonna rush through these things. Sunday night, my boys got school tomorrow. It's like I need to be somewhat seem off to sleep and bedtime stories. If you got kids, read them Richest Man of Babylon. If you don't have kids, read it for yourself. Richest Man of Babylon is the best book ever written on financial literacy, but it's done in a beautiful story, right? It's so amazing. Read it and then do it. Do the savings plan, the 10% rule. Do this basic stuff. Do it. Right? NZDJPY leaving a supply, right? Bearish engulfing needs a retest. That's happening. Pressure to sell, you'll start to see it on the smaller time frames. It's already started to happen, right? So let's track it. Trap. See these traps? Bear trap. Bullet, bear trap, sold against them. They fell for it. You pay the price. You fall for the trap, you pay the price. Nothing good on the weekly time frame here, which is a problem because you need confluence, right? So we should have been in the sell. We could have taken profits over here. And now markets are slowly but surely trying to create a new turning point, which you need to wait for imbalance and all that kind of cool stuff. Daily time frame, there's basically nothing I can draw on the weekly. All right, there's absolutely nothing right now I can draw on the weekly. Okay, because markets are hovering here. See this 365 highest point, and the highest point is linked to this, right? So markets are simply accumulating orders. Remember, some of these things, guys, for us who trade every day, you think markets move at your pace. Markets must accumulate orders, right? So this is what's going on here on the greater surface, and obviously this is what's going on here. Right, so all 5 of our order blocks are working overtime on these charts, right? So we've got a situation like this on the weekly time frame where potentially the argument would be we should start to see some downside. That's the argument, right? But I'm not sure. I'm not sure yet, or rather, I am sure about the downside part. I'm just not sure how it's going to work in terms of entries. Entries matter, right? So, and then with a strong retracement here, all right, markets literally just all of a sudden flip the script. So what do we do? Pull out anti-fib. That's swing high, swing low. So it's a bearish Fibonacci. I'm going to draw it up to there. Seems like markets really use the full golden ratio area, tagged a bearish engulfing supply, and now they're dropping. So one could then make the argument that Leroy Friday set the scene for more downside, right? So that's the argument right now. Okay, fantastic. H4 time frame, PCP to the downside, right? We like it, but also be careful, retracement to the upside. PCP to the downside, retracement to the upside. Because remember, buyers are the ones who push this market up there. And let's see if buyers have arrived at their destination. Almost, right? So if you take the both complicated 365 series, massive bearish engulfing to give you that imbalance, we've got contact. We've got some type of contact. So let's assume sellers are in charge. So I'm starting to pick it up now. So the daily sellers are in charge. H4 is selling, right? So when they got a PCP, cowboy traders will put a stop loss. If you met cowboy traders before, not a stop loss, a sell stop. We'll be like, yeah, price gets here, I go down with it. And there's nothing wrong with that. You can try that. I'll show the best. Make sure your stop loss is above though, right? But that's cowboy stuff because you are selling an imbalance. You are literally selling a decision that the banks haven't made or have made but haven't communicated, right? And you could be right. This to me looks like a PCP. Looks like we might even get a nice red candle to close on the other side on Monday. If we get that, then we're in business on the H4 time frame. On the H1 time frame, I want to see more clarity. There's none. Prices hit a demand. Price is still inside, technically speaking, a demand. You know, so any selling that happens here, it's like going back to that ex of yours who you told yourself you're never going to go back to. It's a toxic relationship here, guys. Very toxic, because you're literally selling sober inside a demand. And to do that, you must be delusional to believe that you have the power to move markets, that you're smart money, and you're not. So there's nothing I can do. I can't take this trade. This trade is trash. Even if price was to go down into the area of value, I can't like take that risk, right? Like I understand the bigger picture of why it will sell. But again, for me, like I said, I'm not a cowboy trader. So I'm going to need to wait for an imbalance on this PCP. I'm going to need to see confirmation. I'm going to have to see for whole volume and then a full retracement back. So I might have to wait for this to happen. And if you've been with me long enough, you know I love waiting and trading. Then I'll sell. That's what I'll wait for, personally. Right now, I ain't selling when the Asian market and the London session can have a party with me. NZD is part of that Asian cluster. So then the Asian markets are going to open tonight. I'm not selling anything in case yes, there's a bearish engulfing pattern on the 1 hour time frame. But it's been maxed out. It's been tested, but the test is so deep. This is a poor imbalance, right? So I'm not even interested. In fact, I could go and do something like this. I could set a pending order up there. Let's just see something. That's better now, you see? So now volume-based trading is telling me like, Leroy, don't stress. The 365 candle, the order block that we saw. Gotta love this stuff. So now I can change my mind. See this here? It's telling me not a lot of money. So there's not enough volume there for it to even be recorded as a sell. This is where we can start to debate. So again, I can't be in the trade fundamentally because I know I'm in a demand, but I'm simply telling you that this is the situation right now. So watch it very carefully, because on the 1 hour time frame, things move fast, right? On the 1 hour time frame, things move fast. I want to see an imbalance like this, as I've taught it, back into this area. If I get it on my Akini hashes, then I can take the sell. But I need the rule to be met, right? Please watch out for that. All the best. I'm gonna write here H1. But again, yeah, don't forget it's inside a demand. As long as you understand you're selling inside a demand, I'm happy that you know that stuff. Oh my goodness, guys, 12, you guys are still here with me. It's 7:15. You guys are rock stars. I appreciate you. Thank you so much. I wanna say something like, I promise the war rooms will be shorter, but I'll be lying to you. I don't want to shortchange anyone. If you show up, you show up. If you need to go after an hour, you need to go after an hour. But I must give you what I planned for you, all right? Because I think it will help you. You one day you won't need all of this information, but no one is giving it. I've checked, done a lot of checks on the internet, different YouTube channels. No one really. It's all about selling stuff these days. That being said, I could never do a course for free. Please, it's a lot of time and energy. But I'm just saying, I'm hoping you guys are using this thing valuably. Whenever you're unclear, please don't forget, just come back to your volume-based averages and just get a better picture. All right. So I was very clear, actually. It's very right. Right. So class effect. Right, if someone was to look at this area of value, class effect, right, there's a very big class effect on the governance end. So when we have class effect with our areas of value, especially on the governance time frame, we must understand the profile, right? So 365 traders, if I've taught you, you know, you got to profile the asset. You got to profile the asset. This is important. This is important, right? So price, demand, major turning point, major turning point. There's a sensitive asset, right? There's a risk sensitive asset. How do we know? It fell through in a crisis, 2008, right? So we know that if a crisis is coming, right, that the next supply it's going to create might be very critical for it, right? Or if it breaks a supply, it's trying to sell high. So we must watch out for that, right? So major turning point demand, unlike many of these AUD stuff that actually broke the 2008 demand, is still active. That's wild. That's wild. Like literally, some assets have removed this long time ago, right? 2009 demand, 2008 demand is active. This reminds me of pound USD. Pound USD looks similar like this. It just didn't make it all the way to the top like this asset did. So when this asset is doing very well, it does very well. When it's doing very bad, it does very bad, right? So this is for me a class effect, but it's still active, right? It's still in charge. Can we simplify it a bit more? No, this is fine. So for me, markets might be retracing because they didn't really make a contract. Yeah, they are. All right. Look at that. Golden ratio was touched, right? See that this little doji green candle, golden ratio was touched. Markets are definitely retracing. We're not in the retracements. None of us are in the retracement. So we need to understand the governor we want to be friends with is down here. We are not in these retracements. We've got glass effect. So if they want to break this, let them break it. They'll come back for us. But what trades can we take during this week? Might be none. I don't know. We don't force trade. This to me on the weekly still looks like it's trying to fall. On the weekly, you know, this to me looks like it's still trying to fall. No, that means nothing if it's been sold off. So for 2 weeks it went up, then it's just been dropped, right? So because those could have been our complicated 365 candles, and markets are making their way down there. All right, so watch out for that. So I'm starting to lean towards AUDJPY sell. Evergrande, crisis type of asset, blah blah blah. On the daily time frame, woo! You want to be a cowboy? You want to be a cowboy at midnight? Jump on a sale. Now I'm joking. but but yeah, I mean, I'm not a cowboy and I don't do market execution trades. But there we go. If you're a cowboy, market closed and started selling, and your fib is on your side, but you've already missed out on quite a bit of movement. So what does that mean? It means your stop loss is over here. And if your stop loss is over there, your area of value has increased dramatically versus if you had sold on Friday, right? So maybe we should stop having war rooms on Sunday and have them, I don't know, Friday, I don't know. But the point is, this is a problem. Like, price is selling, but you need to really overexert yourself. So I would wait for a retracement, honestly speaking. Right, and the retracement is already in operation. So on the H4 time frame, this is a supply that's been used, the golden ratio supply confirmed by the Fibonacci. Price comes in carefully. On the H4 time frame, markets are turning, but markets can't even tell you why they're turning because markets have not made contact with the demand, right? At least not in the way I like it. So maybe a second Fibonacci would be best served. So there we go. So markets might turn again at this fib level. Can we find an order block, at least on the 1 hour time frame, to confirm that? No. Got a PCP going up, PCP going up, bullish engulfing, PCP. It's a very strong uptrend on the smaller time frames. Very strong uptrend. You can try your luck here. I think wait for me to send charts on Monday. So I'm free tomorrow. Or specifically send charts on the stuff that we did together tonight. Wait for me to see how the Asian session pushes charts. But yeah, if you're interested in selling, then maybe try your luck there. But it's weird, right? Yeah, so I'm right. Try your luck up there. Only because the smaller time frames, I don't know why they got very eager and they started buying. But whoo, if we can get this is good. This will be a beautiful trade. If we can get this situation on the road, the markets come here, we hold up until there, an easy, nice 100 pips. All right, we hold. Yes, there's gonna be resistance here and all that stuff here, but we hold until there. Right, AUDJPY done, NZDJPY done, Euro thing. Right, so pound is, and I do apologize for, not covering a lot of assets tonight, but I really hope this helped. Right. Pound is SGD. And watch out, I'm dropping a VIX 75 video in the next 48 hours. I back tested with my little brother. My little brother is 19. He's a supply and demand trader, but homie is different. Homie loves his synthetic indices. I hate them because it's not a pure market, right? But if people like stuff, we should teach it. So I haven't really jumped in that much because, again, I'm a supply and demand trader, and so I already know the manipulations in derivative, and they annoy me. So what we do first is we run a series of back tests. So we've recorded our back test. We did one yesterday, and we're gonna do another one tomorrow. So just watch out for that. So how to trade V75 correctly. It's gonna be all on the internet, and we're hoping to just really uncover everything. Right, British pound versus the Singapore dollar. Sell profile asset, I can already tell off the bat, sell profile asset. Demands have been taken out, supplies are being created. When you keep removing your demands and creating new supplies, blah, 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 you have a problem. You have not a problem, you have a sell profile asset. Right, now we need to find the area, immediate area of value. It's not necessarily the immediate area of value. There we go, but it's the next one, right? So price hasn't really arrived there. So then we have to ask ourselves, where is price now? Where is price coming from? Where is price going? It seems like demand is still in charge, even though it's a sell profile asset, right? And I know there's supply and demand traders who want to acknowledge this, and it makes sense. I understand, complicated 265 candle series, but if you want to get the optimum order block, right? And if markets fill this gap, you're screwed, because if you get triggered here, you have to hold an L all the way up to this. This is a very big time frame. So I like this. I like waiting, right? So now I have to see if markets will pass the test. Will they go up, or is this a problem? And to me, this is a problem. But please wait for me to send. I will literally send follow-up charts on where exactly to buy, where to sell. Because right now I can see I need time to think, right? But we've got a bearish engulfing pattern here. So this could be markets using the area of competition and starting to sell, right, as quickly as possible, right? But if that's the case, we need to make sure it is the case before we can join them, right? Oh, strong, beautiful rally up. Markets making an M formation, PCP to the downside, bearish engulfing pattern. We can see why the monthly looks the way it does. So this could do this. If it breaks here, there'll be a break of market structure on the bearish side. This is a good place to stop, right? I apologize for that, but basically you get my idea. This could work. But again, for 365 traders, you can't, because you have to wait for 3 candle rule to be met first, or at least find an imbalance on a smaller time frame. So let's first go to daily before we rule it off. So on the daily time frame is definitely a sell, right? So that there's something about that area of competition that markets used, right? Markets used it. I don't like it, but markets have used it. So this is what we have going on. We've got a lower lows, lower highs, etc., etc. Higher lows, being created, and these lows here being outperformed, and markets going lower and lower and lower, right? So the trick now is to find a better place to enter, right? So how you do that is you need markets to retrace, you need markets to push up just to come down. A retracement has already happened, right? You already had 2 significant retracements in the markets. I don't know if wishing for number 3 is going to be smart, right? From fib to fib, let's back test. From this swing high to swing low, markets use 50% and then dropped. Next one is sideways drop, then in, out. So from this next fib, so what I'm doing is I'm seeing since about July, which retracements are they using? You see there? Then markets drop and use the PCP level, 38.2%. So we've got 50% and 38.2%. Really doesn't help us that much because markets have been very, very, very picky, right? And then here, this is not broken, but it's there. Fib to fib, markets use this high, and then we're gonna wait down all the way down to this low, right here. So from there to there, golden ratio, everything was used. So it literally wanted the order block, and price has been trying to break that ever since, right? So unfortunately, I can't give a clean signal here in good conscience, at least not on the daily. Last time frame to wait on is H4, PCP, price is really extending up. If I look left, I'll let this thing climb just so we can sell it properly. It's got that characteristic that it wants to climb. I'll take a small risk here, a small risk trade, and then I'll go 5% here. That's what I'll do. 5% here because that's a fresh touch. I would very much prefer that. And if we hold this all the way down there, right? So swing high, swing low here. You can see markets might take that. So I wouldn't do any type of selling, all right? But if markets buy up to here, I would take a risk. I'll take a small risk, but I'd love to also sell there if markets were to do me that honor. Let's see what our Kinihashi confirmed. Yeah, definitely try there. Pound SGD. All right, in the last trade that someone asked me just before we close, guys, CADJPY, once again, I appreciate you. We did 3 hours, colleagues. 3 hours. I really hope all of this was not in vain, right? Let's start from the jump. CADJPY was the best buy trade, best buy swing trade for a very long time for me. Best, ultimate, like just beautiful, man, just beautiful. Then we gave a signal last time, and we're trying to see if our sells are in place. There was a sell entry point that I personally missed. I don't know if I'll ever get it, but this was clean, right? That presidential campaign when all risky assets went risk on. This was such a beautiful rally, and there were multiple entries entered in 2021, but now prices seemingly dropping. I don't know if this is, it's starting to look a little bit tricky, man. Right, sellers are in here full force. I have to tell you, not sellers, sorry, buyers. So this area of value is still intact. That's number one. Right, number two, you can see price is already rejected and falling. The question is, how long will that last? And here's the answer, right? Number one, markets literally created a PCP. So this might not have been there last week, Sunday. I think we looked at this last week, Sunday. Markets had not yet done this. I think they're still making their way up, right? So price created a little PCP. Let's delete that. Let's delete that. Let's delete that. Okay, let's move this here so we can actually see it. And this is the real problem, right? And then broke this, but this was always going to be broken. Why? Glass effect, right? That makes sense. So the point is here. Last chance to sell has happened. I'm almost fine with what I said last time. This is where the real sell happened, and you can see for yourself that's exactly where the real sell happened. Question is now, this could be a trap, not a clean imbalance. So we'd have to wait for Tuesday, because if markets give us a red candle here and markets come all the way back down, which is perfectly fine, then those of you who have not yet entered can then start to wait for retracements, right? If you get another red candle, if Monday is red, then, and it's a good red, it's a strong red, it's a commanding red, then it will quickly invalidate this order block here, because the imbalance rule was not even met, number one. And if it's not met, then we're guaranteed that markets will start to kind of like push price down bit by bit. We're guaranteed that markets will start to do something like that if the imbalance is not met. And once you get that clarity, then price is just rallying down. The 1 hour time frame, it will be actually nice if price actually enters with a gap down. Yeah, there's not much to say. I'm literally just sticking to that. That's for me. That's what I'm waiting for. But up until I see big commitment, I need more commitment from the banks to sell. Right, these rejections are cute. These order blocks are annoying along the way. So I need something solid. I need a big commitment, right, that they're gonna sell. Because what you could happen is you could be in a short-term sell where price just uses you and your money to retest this bullish engulfing pattern. And if that's the case, take profit. Or break even, just break even, right? And then we wait to see if we can ride this out, right? So that's what I'm seeing there on CADJPY. That is what I'm seeing. Ladies and gentlemen, I think we can end it here. Guys, I appreciate you. Watch out, because it's quite big. It's actually a very big week for the markets. Watch out for that crisis. Do the basic work, right? If you want to kind of like get a pip, these guys will cover it. So you want to get the headlines. You want to see anything about Evergrande crisis, anything about to do with the Chinese crackdown, blah, 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 blah. Let's see what happens. But remember, if that happens, our risky asset, 3 strong days for CADJPY, right? Our risky assets will suffer, right? So then we need to adopt and plan. Like I said, on Thursday, I'm presenting my final stock picks, final crypto holds for all our corporate investors. If you're in the Wealthy to 3 years program, your first ever email is literally going to drop on Friday, right? So look out for that. If you want to jump into that before, there's no timeline, right? You just follow that link that I've just posted in there. And then how it works is you get one, at a minimum, right, compulsory from me, you must at least get one a written financial note per month. And that financial note will tell you all the things I'm buying and selling, etc. But then sometimes I might decide to add more during the week or once or every 2 weeks, because you don't buy stocks every day, right? You have to wait for the opportunity. The idea, though, is it's a Wealthy in 3 years program. You have to think long term, And then it's something stupid. I think it's like $10 a month. So it's an annual subscription. So it'll be 120 so from September to September. But if you're already enrolled, like if you registered earlier on during the year, don't fill the form in, don't pay again. Your 1 year starts from September, this particular September. Right, guys, I appreciate you, man. This has been good for me. I got everything I wanted to get out of my chest, right? During the week, I promise you, I will have your back. I will keep releasing short videos of other signals and charts that we didn't have a chance to go through. There'll be like 10-minute clips, buy it, just so that we don't have another long war room during the week. Shake my hand, guys. I appreciate all of you. Cheers, Mr. Kakoma. Thank you, everyone, for attending. I will see you guys in the public Telegram group, private Telegram group. I'll see the registered students on Tuesday, Wednesday, Thursday this week. Right, I'm gonna kill it, guys. I'm gonna kill the live stream right now. Have a good night, everyone. The more you know, the better you are in the markets. All right, the more you know, the better you are. Right, everybody, cheers. Shake my hand. All right, I appreciate you. I appreciate all of you. Woo! It's been a good one. Good night, guys. I'm killing it. I'm stopping the live.